This full guide is going to contain everything that you need to know to start trading options profitably this year. Even if you're a complete beginner, it's going to be packed with more value than what most people charge hundreds or even thousands of dollars for in their courses. But today, I'm giving it to you for completely free. We are going to cover what options are, how they work, how to read the charts, the platforms that you need, as well as the exact strategy that I use every single day in the market, which has consistently been making me over $200,000 every single month. But first of all, who am I? My name is Somesh, and I've been trading options from last 8 years now. It has completely changed my life. Because of trading, I was able to buy my dream house, buy my dream cars. Now I have the financial freedom, time freedom, location freedom beyond what I know. Like I didn't even know this existed at all. Well, I'm making this course 100% free because I want all of you to be able to learn the skill that can change your life the same way it has changed for me. And from this point, let's turn your life around. Let's make it happen. Now, I want to, of course, start off with the most basic of the basic questions. The first question people get in their minds when they're first starting out. What is stock market? Now think of stock market as fruit and vegetable store, pretty much like a veggie market. Okay, it's a simple marketplace where you can buy and sell ownerships. That's it. Like think of this as you have multiple vegetables sitting in the vegetable store, and people can go pay money and buy if they want a little bit of this, if they want a little bit of this, or if they want a little bit of this. That's literally stock market for you. It's just a mechanism for you to be able to buy companies, and that's all about it is. Like I always tell people this example of, they're like, oh, what's market cap? Like I'll ask you a question. Do you think this company A, that is $32 a share, or company B, which is $100 a share, which one is more expensive? You tell me. Which one is more expensive? A lot of people just think of, oh, because it's $100, that means it's more expensive. No, there's a big difference between this, and you need to know this. This is most important stuff that you learn. The difference is called market cap or market capitalization or whatever, market cap, right? What's the market capital of this stock? Like, for example, if I say the company A slice of pizza is this big, while company B slice of pizza is this big. Now you tell me which company looks big. That means the market cap total, how many billion. That means if a slice of pizza, this company has just cut the slices of pizza way smaller. It's still the same pizza, bro. You understand? They just have cut the slices of pizza way smaller into pieces. That means each slice is worth about $32 in this case. Do you understand what I'm saying? But this company has not cut the slices too small, and each slice is worth $100. You understand what I'm saying now? Now, which one is more expensive? Company A. Why? Because the market cap is bigger. The slice of the pizza is way bigger than the slice of the second company. You understand what I'm saying? And that's how you calculate which one is the best one. Now, for day trading, for trading in purpose in general, you should only be looking at like blue chip companies. Blue chip companies are the companies who are like, everybody knows them. Your auntie, your uncle, everybody knows them. For example, Apple, or you have Nvidia. They're doing all these AI chips and everything. Apple is your phone company, Nvidia or Tesla, those electric car company. Then comes your other companies like AMD. They are also making chips. Then comes Amazon. Amazon, where you can buy stuff. Then comes Meta, Facebook, okay? And then comes Microsoft. Microsoft is the one that makes computers. There's so many companies. All these are big names every day, every human being knows. You understand what I'm saying? And when you're day trading, you always want to be trading these. Or for example, Boeing, they make planes, right? And they're easily able to trade it, like they're tradable names, all right? And then comes the small chips. Like small chips simply means small name companies, small companies. They're super tiny. They'll be worth like 10 million or 15 million or whatever, or 30 million or 50 million. They are very, very difficult to trade. Why? Because number one, there's not enough volume. Volume is not many people are selling, like in that the overall sector, there's not many vegetables that they have. Not many sellers are selling it. So it's very hard to go and have some choice which you want to buy. You understand what I'm saying? So it's difficult to profit from. That's why for day trading purposes, for actual just like normal trading, that's not the case. Okay, so now you understand What's a stock market? What makes the stock market more? Which stocks are more expensive? It all depends on market cap. And how can you find out the market cap of a stock? It's super easy, man. Literally, all you have to do is go on Google and search what is market cap of Nvidia. Maybe Nvidia market cap is approximately 4.95 trillion. You can search what's market cap of Tesla, and it will tell you the market cap of 1.25 trillion. Then now, hey, this is a good one, right? Tesla stock price is $400. Okay. And then now if you look at Nvidia, and which is 4-5 times expensive, it's for literally $5 trillion, its stock price is 210. Now, which one is more expensive? This company is more expensive. Why? Because they're worth like 5 times more than what Tesla is. You understand what I'm saying? That's how you calculate which company is big in the stock market. And now the second option that comes, second thing that people generally have questions about is this. You will hear these terms like, everybody talk about bulls, and second one, bears. What's bulls and bears? You know what bulls and bears is? Bulls means buyers. I'll give you an example of this. Bears means sellers. But what's the easy way to remember this? How does a bull strike? The bull will strike upwards. You understand what I'm saying? Literally with the horn, boom, upwards. That means up. Bulls means market is pushing towards the upside. That means it's bullish. How does a bear strike? They scratch with their paws. Bam. That means down. That means the market is moving towards the downside. You understand what I'm saying? Now, there are so many ways you can make money. For example, I'll give you an example right now. Let's say if a company is worth $100 and Bob goes out there and buys $10,000 worth of, XYZ. How many shares can he buy with $10,000? He can buy 100 shares. Why? Because they're $100 each. Okay, 100 shares, $100 each. So now he owns 100 shares. That means he is a part owner of that company. It's like you buying half of the cafe. Let's say you and your friend are going into a business. He buys half and you buy half. You are a shareholder of that cafe. Same goes here. You are the shareholder of that company XYZ. You understand what I'm saying? And now the thing is, a lot of people will get confused here. What happens if the stock prices of XYZ goes up to 101? People get confused here. There is multiple. I'll explain this in detail. All right. What happens if the prices go to 101? That means he had 100 shares, 100 times 1, because $1 up. That means he is in $100 profit. You understand? What happens if the stock prices go down to 99? In this case, he loses $1 on every share and he has 100 shares. That means he's in $100 loss. Okay? Now, when we are day trading, there are multiple ways to do this. Now, one thing is called long. Other one is called short. Okay? Now, what does long means? Long simply means that you're betting that the stock prices can move towards the upside. Like, for example, Apple is coming out with their new phone and you're like, oh my God, this is going to break the internet. This is going to be the best thing ever. You're betting that the stock prices can move towards the upside. In this case, what we will do, you will buy. Okay? But on the other side, let's say this company called XYZ, let's say you start hearing about the bad news that they're coming out with. You're like, their self-driving cars are having accidents or whatever. You're like, this is a bad news. That means the stock prices can make a move towards the downside. In this case, what do? If you already own the shares, you will sell those shares before the bad news. So this is sell. But now something that most people do not know. You can make money, of course, when you buy shares. You buy at 100, it goes to 101, you sell at 101, you make money. It's like every day, every shopkeeper does this. He buys something at, let's say he buys this at $85. That's his cost price. Then he sells it at 105. He made $20 profit. And you know how many customers he get a month out of this? He makes that profit, $20 per bottle. But on the other side, you can also make money when the stock prices are going down. And this is something that most people have no idea. Now, how do you do that? How do you make money when stock prices are going down? Now, you have to be on the right side of the trade, of course. How can you make money? For example, let's say I go to the store, I say, hey, do you have that pen? He's like, oh, no, I don't have that pen. Can you get it for me? So the shopkeeper makes a phone call, calls his supplier. Hey, supplier, would you have this pen in stock by any chance? He's like, yes, I do have it. It will cost you $35. So you're like, okay, can I get one, please? And you hang up. So now you tell this guy who came to your shop to buy this pen, this is you, hey, the pen is gonna cost you $50. And the guy's like, okay, I'll get it. Okay, so what happened here? You sold the pen which you do not have. That means the sale happened first, you got his $50, and now you're going to take this $50 into the market and gonna get in touch with your supplier, and you're gonna buy that pen for $35 and you're going to profit $15. That means the sale is happening first and then the buy is happening later. You understand? That is called short selling. Okay, this short sell, and this long buying. Okay, long buying means you're betting that the prices can move up. Short selling means you can betting that the prices can move down. You can do that in the stock market. When prices go up from 100 to 101, you make money. When prices go from 100 to 99, you can make money. You understand what I'm saying? That's the beauty of this. That's the beauty of this. That means you sell something $100 and then later on you buy it back at 99 and you keep the difference. But how do you short sell? You know, there's a buttons called buy and sell on your broker. This button will say buy, this button will say sell. It's not complicated. In order to for long, you just press this button first and then you sell later. In order to sell, you press this button first and then you press this button after to close the position. You understand what I'm saying? And that's how simple it is. Now the question is, which is again most beautiful question that I get asked all the time, and this is, people get confused about this so much, and today I'm gonna make it so freaking simple for you to understand all of this. We have already covered so much, but we're gonna make it so simple for you. The biggest question I get asked: options. What are options? Because this is the options course, so let's talk about options. Options is simply a coupon. Think of it like a coupon. McDonald's coupon for a coffee. Pay attention to this. This is very important. Don't worry about taking notes. Just pay attention. You can take notes after you pause the video, okay? Think of a McDonald's. McDonald's came out with a coupon saying $2 for a coffee. Okay? And you have these coupons. And these coupons will have expired. Use by tomorrow. Use by tomorrow at midnight. Okay. So now, options simply give you a right. It's a right that you can go into the McDonald's store. It's your right to buy their McDonald's coffee at $2 if you want before expiration. Before time runs out, you can go to the store and that coffee can be worth $4. You don't care. You can buy that coffee cup for $2. It gives you a right to go in and buy or sell a specific whatever you have. Whatever you own, in this case, it gives you a right to go and buy if you want to. It's not an obligation that you have to, but you have the right. You have full right to do so. You understand what I'm saying? Like, so freaking simple. And that is called simply, this right here is called options. Options simply give you a right to buy something if you want to buy it before the expiration day. That's it. Let's say if you go into the store and you have a $2 coffee coupon, okay? You go into the store and you stand outside the store and you're looking up. You're like, okay, coffee right there. Coffee cost $1. Would you use this coupon then? No, you wouldn't. Why would you? Because it just doesn't make sense. You understand what I'm saying? It just doesn't make sense for you to use that coupon. Why would you pay $2 if you can get a coffee for $1? In that case, don't worry about this. So you can buy it cheaper. And that's exactly how the game works as well. If the stock price is $100 and if I have $80 coupon, that means I can go and buy these shares at $80 instead. I will use it. No problem. If I want to use it, I'll use it. If if my coupons are $80 and the stock price is at 50, why would I use this? I don't want to use this, bro. I can buy it cheaper. You understand what I'm saying? So now, as I said, you have two different type of options. You have one call option, another put option. That's it. Call options, you use it when you're betting that the stock prices can move up. Put options, you use it when the stock prices can move down. You understand? That's simple. Now, let's say if your coffee coupon right here, this is called premiums, okay? Premiums. Let me explain this. This is called premiums. Now, what is premiums? Premiums simply means if you have a $2 coffee coupon, and it expires tonight, literally expires midnight, and it is 6 p.m. right now, and you don't feel like coffee, you don't want to have a coffee because you have work in the morning, but your friend has a late night shift, right? The friend has a late night shift, so he has to stay awake. So think about this. If the coffee, this gives him the right to buy the coffee cup for $2. If at the store the coffee cup is $100 now, that means him using this saves him $98. $98. And you know this. You're like, okay, if he uses this coupon, he saves $98. You know what? Hey, friend, I can give you my $2 coupon, but it's going to cost you $30 because you're not going there anyway. You're like, yeah, whatever. Instead of, I don't want a coffee. Instead of nothing, I'll just take $30. He's like, okay. So now his cost is $30 plus $2 that he's going to pay for the coffee. His cost is $32. And coffee cup was $100. How much money does he save? He saves $68. That's it. Okay. So what you charged him, this right here is premium. You charged him a premium. Now he was on his way to the coffee shop. Then he gets a call from his boss. Hey, don't worry about coming to work. Go home and sleep. Start work tomorrow at 4 a.m. He's like, oh my God, bro, I bought this coffee coupon now. And then his boss is like, I'm going to do the night shift myself. He's like, oh shit, are you? Yeah. Do you need a coffee coupon, bro? I have a coffee coupon. He's like, oh yeah, I will take it. He's like, all right, it's going to cost you $50. He's like, okay, $50 plus $2 that I pay for the coffee, it will cost me $52. I'll still save $48. That's his boss thinking about. He's like, I'll still save $48, or I'll pay $50. All right. So now he sells him this coupon for $50. Okay. How much money did he make? $50 what he sold him. $30 what he purchased for. $20. This is called premium flipping. You charged him a premium. You understand? What you bought for at this. So now what does this mean? That means if you're betting, that means you do not have to buy it. You can just flip with the premium. If you're betting that the stock prices can move towards the upside, every single time you buy option, okay, every single time you buy an option, you can simply flip. It will go from like $180 to $220. You can be like, all right, I'm out. You make $40 in this case profit. Okay? You understand what I'm saying? That's how it works. That's how simple it is. Same goes for the puts, by the way. You can sell, this coupon right here that you have, you're betting that the stock price can move toward the downside. Exact same, premiums will go up. You buy a put, that means you bought this. If it goes down, you sell before you actually, done. You make some money. Now, there's key terms. This is called key terms. What are the key terms that you need to remember here? Remember, what is this? This right here. It's $2. The $2 coffee. And it expires when? It expires midnight. The night. Now, if you think about it, there are three things that absolutely matter everything. Okay? There's three things that matter most. One, what is the strike price? Okay? Number one, strike price, that matters a lot. Second is expiration. Do you understand what I'm saying? Okay? And the third thing that matters is what's the instrument? Instrument, current price. Okay? So that means if we have to fill this up, what's the strike price? Let's do this. What's the strike price? Strike price is that this right here is $2 is the strike price. Okay. What's expiration day? That is this right here. Midnight is the expiration. When do they expire? What's the instrument current price? We just found out the coffee costs $100. That's the current price of the stock. You understand what I'm saying? That's how simple it is, bro. Do not overcomplicate it. You never need to. Nobody can ask you for exam. Only thing that you need to remember is calls when you're betting that the prices can move up, puts when you're betting that the prices can move down. Once you buy something, that doesn't mean that you have to go and buy that coffee. No, you can simply flip it. Okay, you can simply flip it using your broker. I'll explain all of that. Okay, now what are the different type of options? There are different type of options now. For example, if coffee costs $100 right now, okay, $85 coupon, $50 coupon, $120 coupon, $150 coupon. These are multiple strike prices that we have. Coffee costs $100 right here. Okay, so we draw a line. The moment somebody buys these coupons, he will already be saving money. Do you understand what I'm saying? Like if I buy a coupon for $50 coffee, that means even if the price of this coffee cup is right now sitting at $100, I straight away save money. So these options are called in the money. They're already in the money. As soon as I buy them, I already make money. Okay? And then comes, I'm just explaining this to you. The only thing that matters is I'll explain it. Then comes at the money. Now, they also refer to as ITM, ATM. Okay, at the money simply means whatever the stock price is right now, that's at the money. Like whatever the price is right now, that's at the money. Okay, now I can still buy it if the coffee prices are moving towards the upside. Maybe tomorrow coffee prices will be worth $105, right? So maybe I'll be like, all right, you know what? I'll buy this. Okay. What are these ones? This right here. If I buy this now, I can, bro, like, I don't understand. Like, why would I buy this now if I can buy coffee way cheaper? But maybe the coffee is like flying from last few days and you're thinking it will go to 200. So it makes sense. But these ones are called out of money, or also known as OTM, out of the money. Okay. You understand? Now, which one are the best ones for us to trade? Always this. Just stick with this. Life is good. These are called at the money. Don't have to worry about anything. Just at the money. That's it. If the prices go up, they go in the money. They will get, there's a thing called some magic called intrinsic value. There's a little magic. The moment they go in the money, that means if the coffee prices go to 105, little magic gets sprinkled on it. That means demand for these go up. And that means if the price goes up, demand for these go up and you get paid hefty. All right. Like your friend who bought that coffee premium from you for $50. There's a lot of friends that come up. He's like, oh my God, can I please get that? Can I please get that? Now they start bidding. I'll pay 50, I'll pay 55, I'll pay 60, I'll pay 65, I'll pay 70, I'll pay 75. That means the moment it goes in the money, everybody wants it. Okay. Becomes the main. Hey, I'm good at explaining this shit, yeah? I know. Okay, you only need to stick with at the money. Don't worry about anything else. That's my strong recommendations. Okay? Now comes your most important thing. There is a thing. I don't want to, have you confused too much. Because this is one of those things where if you get confused, you'll go in the rabbit hole of just like trying to learn. No, learning doesn't mean everything, bro. Executing what you learn means everything. So I'm making it very, very simple for you here. Okay? There's a thing called Greeks. There are multiple type of Greeks. Now there's a gamma, delta. Now what are you like? What the fuck is that? I'll explain. Gamma, delta, vega, and theta. I'll explain all of them. Okay? Now first one is that we're gonna talk about is delta. Now every single dollar that the stock price makes a move towards the upside, delta gets added to the premium. Now what's premium? premium would be like, let's say $80 is the premium for you to buy that specific option. Okay, delta could be like 0.45. By the way, all of this, like if your brokers usually, I don't know why they do that. If they say $80, that means it's $180. I don't know why they do that. They always calculate like 180. Like dollar, that simply means, all right, you understand what I'm saying. That simply means always multiply by 100. I'm like, why can't you just keep it simple, bro? Just write the actual number. Why do you have to be? All right. So now, if the premium is $80, if it makes a move towards from $100, it goes to 101. This 0.45, whatever number. This all broker tells you all of this. How much this is. You don't need to calculate yourself. None of this stuff. But delta is simply the rate of change of the premium. Delta gets added to the premium. Okay, so that means every $1 move, this will get added. Every $1 move to against you, this will get subtracted. So because this moved in your favor, the premium would be 2.25. That means 225. That means in this case, you profit about $45. Okay, that's delta. If it goes against you, that's good as well. Now, what's gamma? Now, gamma is one of those things which you don't need to think about this too much. Now, let's say if new premium is 2.25 right here, okay, plus another $1 move. So it went from 101 to 102 now. This delta gets updated to a new number. You're like, what the fuck? This delta changes itself every $1 because that's what they do, all right? Gamma is something, every $1, gamma would be like 0.12, let's say. Every $1 gamma gets added to delta, so to make a new delta, okay? So every $1 delta plus gamma. Okay, so in this case, what it would be? 2.25 plus 0.45 plus 0.12. So in this case, the number becomes 2.25 plus 0.57, and you do the maths, it becomes 2, this is 282. That means 2.82 becomes the new number, new premium if it goes from 101 to 102. Do you understand what I'm saying? You don't need to. But again, this is a little bit, might be confusing you. Delta simply gets added to the option premium, okay? Gamma simply gets added to the new delta for every another $1 move, so to make a new delta which gets added, okay? You don't need to remember this. Only thing that you need to remember is, I'll explain in a minute. Then comes your Vega. Vega is just like one of those things which is going to be confusing to you all the time. Don't worry about this. Only thing that you need to worry about is near the news, whenever there's a news coming out, usually the premiums get expensive. Okay, these premiums near the news, because people who are selling this to you, they're taking a big risk. Like McDonald's selling you that $2 coffee coupon, they're taking a big risk. What happens if everybody has these and the price of the coffee goes to $500? They will be losing money so much. So when there's a news coming out, let's say McDonald's or the Coffee Association of the world is about to announce what's the new price of coffee, near the news, that $2 coupon, will become a little bit more expensive because it can go to $1,000 a coffee cup. So these $2, the premium on this will be insane, because the moment somebody buys it, they save like $998, literally. Okay, that's Vega, the rate of change of every IV. You don't need to remember that. Just only thing that you need to remember is, write this down. Every news, near the news, Vega acts up. That makes the premiums more expensive. Okay, that's it. Now the fourth one is more important. This is called theta. Theta works something like this. By the way, before I explain theta, let me talk about expirations. Depending on whatever stock you're trading, like if you're trading the main companies that I was talking about before, bro, we have covered so much. We are moving at a pace. I love it. I love it so much. All these companies, the big companies, not Boeing, big companies, they usually have daily expirations, or Monday, Wednesday, and Thursday expiration. Now, what does that mean? That means your coupons are expiring Monday, Wednesday, Friday. But when you're trading ETFs, SPY, which is S&P 500, which is the top 500 companies in the world, you literally have to go to your charting platform and be like, SPY. Literally search SPY, and this is SPY. Okay, they expire every day. Their option contracts expire every day. That means Monday, Tuesday, Wednesday, Thursday, Friday. That's SPY. Same goes for QQQs as well. Okay, QQQs is simply top 100 tech companies. This is QQQs. They expire every day. You understand what I'm saying? Expiration. Now, theta is time decay. Now, for example, if you have a coffee coupon that expires next month and it's $2 coffee coupon, it'll be worth a lot of money because you have so much time to go and save yourself $1,000. But if and it's 11 p.m. right now, but they expire at 11:15, and it takes about 30 minutes to go to the coffee store where the coupon is from. That coupon is worthless at this stage because you're like, man, I can't do anything with it. If I drive to the restaurant, it'll be like they expired. So I can't do anything with it. As the time approaches, the coupons get less and less and less and less worth. You understand what I'm saying? That makes sense? As the time approaches, the expiration date approaches, theta starts hurting the contracts. Theta is just time decay, starts hurting the contracts. But now you understand why they're hurting the contracts, because literally no time in expiration. Okay? Now, whenever, again, I haven't spoken about this, I haven't spoken about price action and all this. Whenever, something is not moving like this and they expire same day, and you have 100 contracts, they are sitting and prices are sitting here in the middle between 99 and 98, and you have 100 and you want it to go to, move towards this, theta is hurting. Theta is always hurting because they expire today. Every single second of the day, theta is like taking away something. I call them leeches, right? They're the leeches that take something away from the contracts every single second. They are sucking blood out of the contracts every single second. So as an option trader, you want the stock to move really quick. And I'll give you the strategies by the end of this video, which will let you know that when to buy so you're not stuck here, so you can make money. You understand what I'm saying? Again, all of this might be a little bit too confusing, but only thing that you need to remember is just the concepts of it. Okay? I'll explain it. Just the concepts of it. As long as you understand the concepts, we are making progress. Now you have to trade this. Yeah. In order to trade this, what do you need? Now there's a couple things that you need, which I will break down. Okay. The first thing, what are the requirements for you to trade this? Now the first requirement is, in order to trade something, you need to see the charts or the graphs. Okay. You need to see the charts and graphs. What platform do you use in order to do so? TradingView. I will also put a link in the description as well for TradingView, okay? That will give you the charts. Now, the second thing that you need is brokers. I'll explain them as well, how to set it up and all that. Interactive brokers do not offer any, no kickbacks to me. I'm just saying it because they're good brokers. I trust them with my money. Second brokers is called Webull brokers. Okay, Webull is really good. Again, I can't just show you how to open an account. There's plenty of YouTube videos. I want to make this as a most valuable resource that you need. But in order to set up your TradingView, what you need to do is you need to go on your, let's go here. Let's go to tradingview.com. When you go to tradingview.com, I will also put a link in the description box below. Once you're in the tradingview.com, all you need to do is make this bigger a little bit. Go down. This is the website that you need. Okay. Go at the top. Go to products, supercharts. The moment you click this, you will be able to see. It will open up on SPY, literally. All right. This is how you set it up. Now you see. Now you probably will have to sign up to their stuff because again, they will literally explain you how to use this. So I won't waste any of my time. They'll show you everything. All right. Now, only thing that matters, the most important thing, only thing that matters here is, you see this right here, these two lines? These two lines on your chart simply means that you do not have a live data. That means your data is delayed. You do not want delayed data, but you need to sign up to them, means sign in and do all the fancy stuff. And now click here, click on learn more, start 30-day trial, whatever. And you need to get the data subscriptions. I think they make a bundle now, like $10 a month. You want NYSE plus NASDAQ plus ARCA. Okay, you need this data subscriptions so you have live data. Otherwise, there's just no point. You understand what I'm saying? NYSE, NASDAQ, and ARCA plus there's something else, CME, I think. But all I'm saying is super important. And now let's go to ibkr.com. Literally go to ibkr.com, interactivebrokers.com, and click on open account, start an application. You set up your username, email, your country, wherever you're from, and they will open an account. That's interactivebrokers.com. Then comes your webull.com. Just go to webull.com, and all you have to do is sign up. Click on sign up right here, and put your numbers, verification, all that. Just sign up again. You're good to go. Again, having these platforms are important, but if you do not know how to trade them, you're gonna still lose money, or maybe you already have them. But you can watch YouTube videos on this later after watching this video, so you're good. Okay. Now comes the next most important part. After you get these, bro, do not just start trading fucking like a crazy madman, okay? You need to paper trade for a minute. Why? Because now you're trying something which is total brand new to you, okay? Do not just jump in the driver's seat. Learn first. Learn how the platform works. Learn how the charts work. Familiarize yourself how it works, like what are the different options, okay? Watch more videos about how interactive brokers work, Webull work, and then comes they will ask you cash account or margin account. Now, before maybe about 2 months ago, there was a rule where you could only trade with $25,000. That rule doesn't exist anymore. I mean, you clearly saw on the Webull website, what do they say? Day trade without the 25K requirement. No more 25K requirement. No more day trade limits, because it's genuinely no more limit. The government lifted the limit up. Okay. But what I would recommend is you still opening cash account. Why? Because it's more stable. That's number one. And margin, let's say if you lose more money than what you put in, now you owe them the money. Or if you forgot to close your position, now you're paying interest because you use the margin. It's just a little bit difficult, and you do not want that. You know what I mean? So cash account is good. Like, that means you can only trade with whatever money you have. If you have $300, you can only trade with $300. Now, if you have the discipline to do so, you can still jump on margin. I would recommend so. Again, if you have like discipline, if you're a total beginner, jump on cash account. Then in a month time, you can switch to margin account, because you now know how the platform works. You know that if you have a position open, you'll be able to close the position and all that fancy stuff. You understand what I'm saying? Now that is all done. Cash account or margin account, I would recommend first 30 days stay on a cash account, and then just call them up and be like, hey, can I jump on a margin account? And they will switch to margin account. Now, let me set up some indicators. Now, what are indicators? Indicators are literally, they're just indicating the price. Indicators simply means you can add it on your charts, and they will explain like what the price action is doing right now. Let's actually, matter of fact, let's break this down. You know what? Let me remove all the indicators that I have on my charts right now. Remove indicators, remove drawings, and have a raw chart of SPY. Okay, now we need to set up some indicators. Now, in order to set up your indicators after you have purchased or signed up or signed in, go to indicators. Let's search the first one, most important one. We're going to start off with volume. Once you go to volume, click on this volume. You'll see these lines on the bottom. Okay, we'll do the settings on all of them in a minute. Okay, let's just set them up. These are the indicators that I use. Go search exponential moving average. Okay, moving average exponential. Click on it twice. Boom, boom. Okay, now let's go and set up SMA. Literally just search SMAs. That's simple moving average. Click on it twice again if you want to. Okay. I like to use 2 SMAs. Then comes VWAP, volume weighted average price. Boom. And now let's do ORB. ORB, I like this by ZZZ Crypto 123. Just click on his name. Boom. Add it on your charts. Now we have all this added on our charts, but this is not accurate yet. We need to change the settings of all of them. Okay, so let's go to the settings of volume first. Go to the settings right here. Leave everything here like this. Style can stay everything like this. Turn this on, volume moving average right here. Change the color to yellow. Good. Then go to inputs, change this to 5. Okay, you're good. This is good. This is good. This is good. The settings are done. Now let's go to the EMA first one. This is good. Style. I like this green. All right. I like this green. Inputs. I like 8. All right. Make sure it says close. Everything else can stay the same. Okay. Press OK. Let's go set up the next one. This one I like the color red. This can stay the same. Rest of the style can stay the same. Input I like this 21. 21 close. Good. Let's go to the next one. SMA. I like this SMA at 200. The style that I like is color orange. I do not like the straight line. I like little circles. Makes it more easier for me to just spot. Okay. Let's go to the next one. Let's change the color of this one to little maroonish or purplish. Okay, and then go to inputs. Change this to 400. Okay, rest stay the same. Style instead of line. Again, I want circles. For visibility, you need to turn off everything. But change this to 5 minute to 5 minute. Okay. This is good. This is good. This is good. Now let's go to the VWAP settings. Look how clean it all looks already. We want to make sure it says session. This source needs to be H plus L plus C divided by 3. This is good. Then band multiplication, turn it off. Okay. Oh, so clean already, isn't it? Okay, this is all good. Session, hide, click this, hide VWAP on 1 day or above. Go to style, change the color to white if you have a black background, otherwise change the color to black. And this is good. Rest of it is good. Okay, this one as well. Turn off everything. This is good. Okay, then comes your ORB. Let's change the settings of here. Turn off everything here. I want the settings 15 minutes. That means 1 to 15. Go to style. This can stay the same. Go to inputs. We want to change it to 15. ORB total 15. 9:30 is when the market opens. The stock market, US stock market opens at 9:30 to 9:45. Press OK. Now these are the settings. Now do you see how this chart looks so much familiar to what I was showing before? This is called charting. You understand what I'm saying? That's how you set it up. Okay? Like in detail. You got it? Once you have all this set up, we'll talk about all of this. Okay, how to use them, how to make money from them, how to read this stuff. We'll do all of that. But for now, as long as you understand these basics, this is the most important concept that I want you to understand. Okay, now let's go back to our whiteboard. Okay, now you know indicators. They help you a little bit during the day, and I'll show you the strategies, how they help them as well, how they help you as well. Now comes candlesticks. What are candlesticks? Candlesticks simply, there's 4 points on candlesticks. Okay, every candlestick has 4 pointers. What are the 4 points? 1, 2, 3, 4. Okay. Where the price is open, what was the low of the candle? Where the price is close, what was the high of the candle? Is somebody going to ask you these questions? No, this is important to know. All right. This is also called open, high, low, close, OHLC. Nobody's going to ask you ever, but one candlestick simply tells you everything. It tells you whether buyer is in control or whether seller is in control. For example, if the price is open at 100, it closed at 101, the high was 102, this 199. Who do you think was in control here? It opened at 100, it closed at 101. That means it's a green candle, yeah, because it went up. Who was in control? Green means who was in control? Buyers or bulls were in control. Okay, what would have happened if it was the other way around? The other way around simply means if the candlestick was right here, you have 102, 101, 100, and 99. But in this case, what happened? Price is opened right here, closed right here, This is your high and this is the low. In this case, this would have been a red candle. Why? Because prices opened higher and closed low. What's the case here? Who's in control? Sellers are in control. By the way, look, you putting in time, man. I'm freaking proud of you. Like, so many people right now could be watching Netflix or Breaking Bad or their favorite show while you were sitting here trying to learn a skill set which will better yours and your family's life. I'm proud of you, bro. Like, I see you. I remember the time when I was putting in the time, and it was difficult, man. There was nobody that's clapping for you. There's nobody that understands you. There's nobody that actually sitting there be like, "Hey, bro, I see that you're trying to escape the cycle." There's nobody that like, you do not like anybody right now. You talk to people, they have no goals. You're like, man, why would you waste your time? I see you, bro. I was the same. I promise you, I'm not different. I just started before you. You just got to the game a little bit late, but that's okay. Let's make let's make it count now. Let's make it count now. I just wanted to take a minute because I know at one stage I was on the other side of the video. It's difficult, bro. But you know what? It's fucking worth it. It's so worth it, bro. Like, literally, it's so worth it. You got this, bro. I'm fucking proud of you. I don't know who you are. I don't know what you look like. I don't know if you have hair or maybe you're bald. If you're bald, like, I hear my hair when I tap it. I hear my hair. What do you hear? I'm just joking. Well, whosoever you are, whatever you look like, bro. The only reason I'm making this video is because I'm rooting for you. So you keep going. You got this. All right, let's get to it. Next topic that we have here is called support or resistance. Now, what's support or resistance? Support or resistance simply means, think of it like a floor and the ceiling. That's support or resistance. That's it. Support, you might be like, what does that mean, bro? Resistance. All right. Now, what does that mean? This means this. You do not need to know which one is support resistance. I always confuse them. Don't worry. I just call them levels. I'll explain what does that mean. Let's say if you... No, actually, before I even move forward, why do I call them levels? Because I forget which one is support, which one is resistance. But the thing is, it doesn't really matter. Let's say if there's multiple levels right here. This is your house. Right? They were crooked, but let's say if this is your house. This is where you are... This is where you are standing right now. This is you. Right here. Where are you standing right now? You're standing on the floor. That means this is stopping you to go underground, right? Okay. And this is your wife right here. We'll make your wife purple. This is your wife, and she's folding the clothes. She's upstairs and doing her chores. And she's like, can you please come here right now? You're like, yes, boss. Because if you say no, she's going to whoop your ass. All right. So what do? You go up and you go to her. And you're like, what's up? Think about it. What was your ceiling before? Now is your floor. That means this same level can act, if the prices get above it, it will act as a new floor. And now your kids start acting up. They're like, oh my God, right? Your wife's like, can you go check on these motherfuckers? What are they doing? You're like, okay. So you go even upstairs to check on your kids, right? What happened? Now the ceiling, the level that you had before is, like, literally, think about it. The ceiling that you had before becomes a new floor. That means every single time a level breaks out of a new level, it will act as a strong support or strong resistance level. Okay, so I forget all the time which one is support, which one is resistance. I just call them level. Every single level is a level on your chart. Even though it breaks, that doesn't mean it's less significant. It's still a level. You understand what I'm saying? That's how simple it is to understand. You do not need to overcomplicate this ever. Now, let's talk about the most important concept of all. We're going to dig deep into this because this is going to make money. And that's why I wanted to explain levels so much in detail. Levels. What makes levels levels? Wherever the prices are slowing down, so let's say if prices are slowing down over and over again here, that's a level. Wherever the prices are rejecting over and over again, that's a level. It can break above, come back and retest, break above, come back and, they are level. These are called levels. And right here, what's happening? The candlesticks are happening here. So multiple candlesticks put together becomes, put together a long period of time will form levels. You understand what I'm saying? This is most important ones for you. So now every single day, the names that you're trading, like for example, these are the names that I'm trading every single day. SPY, QQQs, all these names that I'm trading every single day, I draw levels on these every single day. You understand what I'm saying? I draw levels on them every single day. And that's why I call every single trade that you have, there are total 6 essential components of a trade. Number 1 is a reason why you're entering the trade. I'll give you the strategy so you will have the reasons. What's your entry price? Where are you going to enter? Third is, what is your stop loss? At what point does this trade becomes it's not valid anymore? Fourth, what is your profit target? Okay. Fifth, what is going to be your position size? How many shares or how many options are you going to buy? And number 6, trade management. How are you going to manage your trade? And I'll explain every single thing. Reason, I got you covered. Entries, I got you covered. Stop losses, I got you covered. Profit target, I got you covered. Position sizing, I got you covered. Trade management, I got you covered in this video. Hey, we're going in detail right now. All right, all of this, you see, all of this, I simply call this one simple, like me personally, I call this LTP, levels, trends, and patience candles. The levels are the foundation of everything. That's what we're going to talk about right now. Then we'll talk about everything else. Okay, all of this starts with the levels. Once you have levels, you know your reasoning, you know your entry, you know your stop loss, you know your profit target, position management, everything. Okay, now let's get right into it. Now, in order to get help with your levels, now actually, before we do the levels, this point is actually probably more important. Time frames, because this will make so much sense after this. What does time frame means? Time frame means right here. If this is daily chart right here, that means every single candle that you see right here represents, every single candle represents one day. This is yesterday, that's day before, that's a day before that, that's a day before that, that's a day before that. Okay, every single day on a daily chart. When you're on a daily chart, that represents, and you can change the time frame right here. Let's go to 1 hour chart. And by the way, if you want to actually fix the settings as well, fix the settings of your trading view. Go to settings. These are my settings. Just copy them. Pause the video, change the settings. This is the style. This is my full settings here. This is my canvas settings. This is my trade settings. This is my alert settings. This is my event settings. Okay. Now, these are my settings. Make sure that you are on extended trading hours. Extended trading hours means you want to see what happened. Now, stock market works very differently, okay? Now, I understand that you might already not know this. You have called opening hours. Opening hours simply means if the stock market opens at like there's 3 different types of market that actually happens. Okay, 3 different type of markets. First is called pre-market. This is market. This is post-market. If you're gonna trade options, you cannot trade options here. You cannot trade options here. You can only trade options here. Okay, this starts at about 4 o'clock in the morning, finishes about 4 o'clock in the evening. Okay, so this opens at 9:30 Eastern, all New York time, 9:30 to 4, and this actually ends at 8 p.m. actually at night. Okay, so that means from 4 a.m. to 9:30, 9:29, it's pre-market. Market is open. You can buy shares if you want to, but not options. 9:30 to 4, at 4:01, like literally at 4 o'clock to 8 o'clock at night, or 8:30 at night, I think, 8 o'clock, whatever, it doesn't matter. That's post-market. You understand what I'm saying? Okay. It's important to keep your post and after hour data on the charts when you're drawing levels. So now which time frames? Every single candlesticks. I love 60-minute charts a lot. Okay. That's where I draw my levels on. Okay. I draw my levels on a 60-minute chart. Make sure it's extended trading hours. You can change the settings right here. Make sure it's not regular. If it's regular, your indicators will be a little bit funny. Like check this out. It says 200 moving average is sitting right here, but a little bit funny. But when you go to extended trading hours, a little bit different. Total different. Actually, matter of fact, it's a totally different chart. Check this out. It's a totally different chart. So you need to know your things, bro. You need to have extended trading hours on. Okay. So now when you want extended trading hours, there's a way to trade all of this. There's a way to draw levels on all of this. One of the simplest ways that you can draw levels will change the game. And why do I use 60-minute charts, by the way? That's what the big smart money hedge funds, they are using. I have a lot of friends now, bro. That's what they're using to trade. That's why I use this to trade. You understand what I'm saying? Now, how to draw this, how to do all this? You simply go on a line chart right at the top. Okay, go on a line chart right here. Go on line chart instead of candlesticks. Go on a line chart. And what are you going to do? You are simply going to draw levels. Go on the left hand side. Find your horizontal line. And you're going to mark, like, think about it. Every single bend that you see on the line like this, you're going to mark them as levels. We will adjust them if we want to, but you're going to mark them as levels. Line. Yeah. Let's go. Let's do this. All right. Right here. Right there. Right there. Right there. Right here. Boom. 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 We're going to do few towards the upside, few towards the downside. Oops. Okay. Now we've done some levels. Now let's go back to the candlestick chart and we will adjust them a little bit. Okay, so in this case, can we adjust this? Maybe move this a little bit lower. Okay, we moved it lower. Can we move this a little bit higher so it's touching all of this? Yeah, okay. There's too many levels sitting too close to each other. We need to delete some levels, but we missed a level here. Why? Because that's where the candle bounced. Look at this, broke above, bounced here, came back, retested this area. This is good. This right here, okay, a lot of times broke above, bounced a few times, but this doesn't make sense. Nothing happening here. Okay, let's move this. Now some people ask, are the wicks important or body important? Wicks are important, bro. Think about this. What are wicks? Those things that I showed you on the candlestick right here, these things are called wicks. Okay, some people go, are the wicks important or the body of the candle important? Wicks are important. The reason why it's important is because that was the point where the buyers or sellers showed up. So of course it is important. You understand what I'm saying? So now we have adjusted these. Let's go and adjust them a little bit. Okay, this is good. Like check this out. So many rejections. This is good. So many rejections. This is good. Roughly here. Too many levels too close to each other. We'll just delete this. Okay. Maybe a level here. Check this out. Wick bounce. Okay, this is good. Boom, boom, boom. Okay, a few levels. Maybe there's a level in the middle here. Why? Because check this. Now, I'm simply drawing levels from the most recent time that I have available. You understand what I'm saying? Now, if you go on a 5-minute chart, you'll be like, man, these levels actually get respected. Look at this. Bang, 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 bang. Now, this is just an example. I'll show you so many examples moving forward. Don't worry about it. But we switch to the line chart to remove the noise. So we draw horizontal lines at the obvious peaks and valleys. Okay, that's exactly what we did. We draw the lines on the obvious peaks and valleys, and then we adjusted those lines. So that checklist simply suggests this. Okay, now once we have levels drawn on our charts, and I will explain them again, don't worry about it. Understand it might be a little bit fast. This is levels, which is done for now, but we'll get back to it. In your pre-market checklist, we haven't spoken about how to day trade this yet. The pre-market checklist, the first thing that goes here is fresh levels daily. Every single day you need to draw fresh levels on all the stocks that you're watching on the day. I watch all of these on the day. I draw fresh levels every single day. And matter of fact, I don't just draw levels myself. I actually send all my levels, everything that I'm using It's just because I'm doing it anyway and it helps everybody out. I'm doing it for my students as well, where they can see my levels, what levels I'm watching. You understand what I'm saying? So I send all my levels that I'm watching, the most important levels that they should watch every single day, right? With the actual video explaining where those levels are coming from so they learn as well. Now, this is important because if I'm doing it, and the only reason I'm showing you that is because I draw levels fresh every single day. And I've been doing this nearly 8 years now. If you're total fresh, you need to draw levels every day so you get better at it. What are we going to do just before the market open? Just before the market open, we are going to trade on a 5-minute chart for now. Okay? We're going a 5-minute chart. Market opens at what time? Think about it quick. Go to your notes. Check. I just explained. 9:30. So this right here, let's go to 9:30. Just 5 minutes before the market open. This is market hasn't opened yet. Market opens on the next candle. 5 minutes before the market open, we are going to mark our NTZ. And that's the second point. 5 minutes before the market open, mark NTZ. Now what's NTZ? NTZ means no trading zone for the day. That means you're not allowed to trade there in the day. So now what's no trading zone? No trading zone is 2 levels towards the upside, 2 levels towards the downside. But what are they? Yesterday high. That means whatever the price is highest point of yesterday or the pre-market high. Let's say if this is sitting here, this is sitting here. Yesterday's low, pre-market low. If this is sitting here and this is sitting here, you divide them into 2 parts. This is top part, this is bottom part. That means you need to draw a box. That means you pick the highest point here to the lowest point here. This right here, then you extend this a little bit forward. That becomes no trading zone. That means if the prices stay in this range, you're not going to trade. Now, in order to draw no trading zone here, what I'm going to do is I'm going to remove the drawings. It hurts, but we'll come back to it. Actually, instead of removing the drawing, I'll just hide the drawings. Much more easier. Okay. In order to draw our no trading zone, yesterday high point is sitting right here. Lowest point is sitting right here. Pre-market high is sitting right here. Pre-market low is sitting right here. I'm going to divide them into 2 portions. This is the highest point of this portion. This is the lowest point of this portion. Right here. This is no trading zone for me today. In order to draw this, because we're going to draw this, all the lines will come back as soon as I put this on my screen. Watch. Now, this is no trading zone for you. Okay, if the prices stay within this range, you're not going to trade. That's just for this stock. Maybe for other names, there were, prices were probably about to break no trading zone. But for this stock, if the prices stay within this zone, you're not going to trade. You're only going to trade once the prices break out of this zone. You understand what I'm saying? That's a part of the strategy. I'll explain the strategy in a minute towards a little bit later. Okay? This portion is clear. As long as this portion is clear, we're good. Like, there's a reason why you never want to trade inside the no trading zone. There is a lot of manipulation happening. There's a lot of smart money, big money. They're trying to manipulate every single thing inside the market because the prices are stuck between it's called chop. One is trend, other one is chop. You don't want to get manipulated by the money. Okay, the smart money, the big money will manipulate the price action so they can take your money away from you. And you do not want that. You do not need that. You're too smart for that. You understand what I'm saying? So in order to avoid yourself from that, that's why we draw this, so it makes our life a little bit more easier, more consistent, more safer, more, you want to have higher chances of making money. That no trading zone saves you. After you become a little bit more consistent with making money, after you become a little bit more better at making money, of course no trading zone you can still take trades within no trading zone with small position sizes, but for most part you shouldn't be trading in no trading zone. Okay, as long as this is clear, we move forward. So now, how do we know that a level is breaking? That's a question. After no trading zone and all that is done, you have marked all this. Now again, these are all missing pieces that we are putting right here. We're gonna connect all these dots and you're gonna be like, man, this is so freaking good. Okay. Now that all of this is done, now you need to ask yourself what's volume? You know, the volume that we marked on our bottom of our charts right here. What is volume? If let's say if a critical level is sitting right here, if the prices are breaking above the volume, if the prices are breaking above the level, you need some volume. Why? Because otherwise, this is where the prices got rejected last time. It can reject. You need a lot of volume. If the level is breaking, that means the prices can move up. If a level is breaking towards the downside, that means the prices can move down. But you need to confirm the volume at the break of the level should always be higher than the volume previously. You understand what I'm saying? For example, check this out right here. These prices were getting held by a level. The moment it broke below, there was a lot of freaking volume. Do you see this? How much volume it was comparatively? That's what I mean. So whenever a critical level breaks, you need to confirm it with the volume. I'll explain it in detail. But there's simple ways how you can do so. If there is a lot of volume at the breakout, so that means big volume at the breakout, that means it's a confirmation of smart money buying. The big money is also buying. But what happens if a level is breaking out but the volume is looking normal? This means it's a trap. What happens when a trap? Prices can come down, and that's when your stop loss gets triggered. So volume will confirm it. Has it ever happened to you where you jumped into a trade, everything looked good, and then all of a sudden it reversed, and you're like, oh my God, how does this happen? You can't understand. That happens because smart money got you. They know what you're doing. And that is why, what if I tell you, I'm going to show you, we do not, again, this is going to blow your mind. Let me tell you the difference between me and like us who make money and people who are not making money. People who are not making money, you know what they do? They use levels to get in a trade. They're using levels to get into a trade. You know, people who are making money, what they're doing? They're using levels to get out of a trade. So that means my entries are nowhere near levels. My entries are somewhere in the middle. I'll take profits here. The moment when all these people who do not know, all these dumb money suckers are entering, I'm selling it to them. That's why the prices are reversing on them. Okay, so now you know how to identify the key levels, but just knowing the levels is not enough. You also need to know which way the market is going to go. That means if the market is pushing towards the upside, we want to make sure that we are trading the upside and not jumping in the wrong direction. You understand what I'm saying? And that's what we're going to cover next. Everything to do with the trends. Because trend is probably one of those things, like, you might be like, what is trend? Now, trend is one of those things which is like, if you spot them, man, you're going to make a lot of money. Like literally, and it's so easy to spot, but people still fight them. I'll explain it everything in detail. Okay, so what is trends? Trend simply means when something goes in, it's like Newton's law. When something is in motion, you're gonna stay in motion unless outside pressure is applied. Okay, so things staying in motion will stay in motion continuously. I think that's how it goes. So that means if something starts falling, it will keep on falling up until something comes out of the blue and stops it. You understand what I'm saying? So that's trends. Now trends in probably day trading world would simply means higher highs and higher lows. Now you might be like, bro, what? Okay, so higher highs, higher lows, lower highs and lower lows. That's for the downtrend. Okay, so I'll break it down. Okay, so for the higher highs, think about this. Think about your life in a general. Let me ask you this question. Think about your life in a general. This will make everything super clear. Think about your life in general. How does your life work? Do you just go up in a straight line to success? No, nobody goes up in a straight line to success, right? Why is that? Because that's just not how the game works. But how do we go towards the upside then? Like, let's say you just finished your school. Let's say you were in school, you just finished your school. Now you're trying to hunt for a job. When you're looking for a job, You're like, okay, let me see. You're stressed. You come down a little bit on your, finances, let's say. Then you get a job. Now you're getting lifted up. Now you start getting involved in office politics that make you a little bit, mentally stressed. And now you start dating a girl. Life is going well. And now this little tension between you and this girl started happening. Okay. And then you were able to, solve them problems. So you move even higher. And then at work something started happening. The vice president or whatever started, left the job, and you were really close to him, and now you're scared that the new guy might not be as close with you and things will get tough. But the company nominated you to become the vice president, and now you're like, as soon as you're so happy, now the new stress kicks in. And now what happens? You were able to take it over and you keep on going. Now, how does this work? Think about this. We kept moving. Nobody goes up in a straight line. There's always a new thing, the new rock bottom that you hit. But think about your life in past. Every new rock bottom that you hit in your life, it was always higher than the previous rock bottom. Think about it. The new rock bottom was always higher than the previous rock bottom. Do you understand what I'm saying? And the new stresses, new things. Like you 6 years ago probably had a different type of rock bottom where you have now. That's how the life works. You understand what I'm saying? So now that we know this, let's say, now that we understand this in detail, this is how the life works. That's how the stock market works as well. You understand what I'm saying? So in order to do this, what they do is they will be like, okay, let's say if this is the low right here, would you say this low is high, this new low is higher than the previous low? This is the low as well. That's why it's called higher low. This one, it's higher low. This one, it's higher low. This one is higher low. But this is a high, the first high when you came out of your school, right? Of your university, that you were, a little bit, you felt good. And now next high is going to be higher than the previous high. That's how a uptrend works, okay? And it keeps on moving. Now, what will break the structure? Think about it. What will break the structure here? The structure will break the moment you fail below the previous high low. Let's say, for example, I'll give an example. Let's say, for some reason you got fired from your job. Now, this stress was coming from because you got a new job as a vice president, and you're like stressed, but somehow you got fired from that job. Now you have broken the structure. You understand what I'm saying? That is called break of structure. Okay, that's called break of. That means it went from uptrend to now we broke the uptrend, because you can't say it's a high low anymore. So this low becomes a lower low, like from the previous low, it's a lower low, and maybe pulled back till here. And now you're like, okay, you're like, all right, it's not end of the world. You go talk to your parents. You're like, I just got fired from job. They're like, it's not the end of the world. You're gonna get a lot of jobs in your life. You feel a little bit better, but you still feel embarrassed by it because you got fired. So you pick up some sedatives, like some alcohol or something, to calm yourself down. So you feel even more down because now you're like, man, I don't have money, but I'm drinking alcohol. All right. So, but your wife is there to help you out. It's like, it's okay. Let's apply for more jobs. But you keep drinking, and now your wife's like, I can't be with a losing ship. So she leaves. So now what happens? You feel even more lower, but then you pick yourself up. You're like, I can't do this. I need to go apply for jobs. But while you go apply for jobs, nobody want to hire you because the last company left a bad review or whatever. You keep on going down. So this is called, what is it? Think about it really quick. This new thing would be called this low. This low is lower than the lower low. So this is called lower low. This one is lower than the previous low. Lower low. Lower low. This high, this was the high. What is this high? It's a lower high. And next one is a lower high. Next one is a lower high. And that's how the trend works as well. The stock market works as well. Okay, then it will break the structure and then go on an uptrend again. You understand? That's the trends, that's the structures, that's how you need to think about it. And this is the best way to think about this. Okay? Bro, I'm good at these examples, yeah. I know, bro. Now, what you can do here is to kind of identify where the next, this is going to be in the stock market. What you can do is you can draw trend lines. Like you can mark a thing called trend lines like this. Think about it. Every single time you're about to touch here, like first couple times you figured out the trend line, the next time you can kind of predict where the bounce is going to be. But if the bounce happened or if we broke below that, then we can trade the downside. These things right here are called trend lines. Okay, like they are trend lines. Now, what is trend line? Trend line is simply a, the level that we drew. It's simply a level. The original levels we drew as this. These levels are like this. So these levels go like this or this. Okay, it can be upslope or downslope. Upslope for the uptrend, downslope for the downtrends. You understand what I'm saying? That's simply it. Like, this is how it works. This is trends for you. Like, now one thing, you never want to bet against a winner. Like, when you're winning, you never want to bet against a winner. All right? So that means when you're going up in life, you don't want anybody to bet against you, because you breaking through all the new, roofs. So that is called not fighting the trend. That's what I mean. Never fight the trend. Okay? If something is going up, trade the upside. If something is going down, trade the downside. I'll show you plenty of examples of this, so don't stress. I just want you to understand the theory now. Okay? You understand what I'm saying? Think of it like, I want you to think of this whole thing like a momentum. Okay, there's a thing called momentum. Momentum simply means when something moves, like momentum needs, what is momentum, by the way? The scientific term would be mass times velocity equals speed. All this momentum means speed. All right, what's the mass of it? What's the velocity of it? I'll give you an example of this, okay? Momentum, if you are on a slope, this is a snowy slope, the little snowball becomes a little bit bigger, becomes a little bit bigger, becomes a little bit bigger, becomes a little bit bigger. This is called snowball effect. Okay, so when something moves in a trend, depending on the mass and how fast it's going, it can gain a lot of strength with it. Okay, what's a difference between strong momentum and weak momentum? I'll give you the best example of this. Let's say if this right here is the wall, draw a wall. This is a brick wall, and we'll draw another wall. We'll just duplicate this wall right here. Okay, this is a wall. Now you tell me, okay, based off your understanding, you tell me if this wall is standing in the middle of nowhere and I have a big freaking truck approaching. If I have a big truck approaching, there's a truck. If a big truck is approaching this wall, what do you think will happen? If I'm on a full speed, 100 miles an hour, what do you think is going to happen to this wall? 100 miles an hour, provided that the person inside this truck is, they will not die. If it runs straight through it, what happens? The wall breaks. Yeah, that means strong momentum. If I was on a 10 miles an hour, because what did I say? Momentum means momentum means mass times velocity. Mass times velocity. Okay, velocity means speed. Momentum will mean, what is a momentum? Mass means how heavy the truck is. Imagine now it's a little, very, very little fucking mosquito flying straight through the wall. Do you think he's gonna break the wall? No, you're gonna fucking fall and die. Why? Because his mass is very weak. The mosquito's mass is super weak. You understand what I'm saying? But if a mosquito is flying at the speed of light, do you think you're gonna go through? Yes. You understand what I'm saying? It will go through. That is called velocity. The speed is super aggressive. All right. In this case, if it doesn't matter if a heavy truck, but moving at 1 mile an hour, the chances are it's not going to break the truck. It's not going to break the wall. You understand what I'm saying? That means when something is moving and it's moving aggressively with a lot of momentum, a lot of speed, a lot of the big candles are forming, a lot of sellers, a lot of volume, take it easy. Okay? That's a sign of a healthy trend. Okay? You need high volume. All right? Another example of this would be when something is in a high momentum, these pullbacks that you see, these little pullbacks are super small. They're super small because nobody wants a pullback. They just keep on betting. But when something is in a weak momentum, the pullbacks will increase. The pullbacks will become bigger and bigger. That means every little high brings a lot of depression, stress. So if you're looking at this, these are two different people. One is keep breaking through the walls. The other one is, every time he makes a new high, he goes and gets drunk and gets high and all this, does all the dumb stuff. Which one are you betting on? Company A or company B, or person A or person B? You're of course betting on person A because momentum is strong. Okay? In this case, the candles become smaller and smaller, the pullbacks become larger and larger. All right? I will show you on this chart. This is as long as you understand what's the difference between strong trend, weak trend, strong momentum, weak momentum, trend lines, this trends, overall structures, we are good. You understand what I'm saying? Now, there's so many indicators that we can use for trend confirmation. All right. Now, I personally remember the indicators that we set up. I personally use 200 SMA. I'll show you all of this. Don't worry about this. 200 SMA, and I also use 500 EMA that 8 EMA that I showed you on my charts before how to set it up. We set it up before, remember? We did all that stuff on setting this up. So it's just 8 EMA is this green line. All right, don't worry about this for now. We'll go back to it. I use these indicators. Just write it down. We'll go and have a look. Okay, I use them to guide me. Also, I use 21 EMA to guide me as well. This was the red line that we set up on our charts, remember? So I also used 21 EMA to guide me as a chart. So that means if the trend picks up and it's holding 8 EMA, every single pullback is touching 8 EMA, we're good to go. Keep on pushing. Don't worry about it. That's what it means. Okay, so this is a little bit about trends, and I'll show you examples of trends, like, strong trends and weak trends. Like this, for example, would be considered a little bit weak trend. Why? Because the pullbacks are quite heavy. Think about it. All these candles that are pulling back, they're quite heavy, right? But if you look at last week, I made $155,000 on that day. I think it was right here. I made $155,000 on this day. Think about this. Every pullback is super small, but big move toward the downside. And then what happened? The structure broke right here. Remember what I said? What did I break down before? And that's exactly what's happening here. What we'll do is we'll hide all the indicators for you, okay? And we'll just look at this just raw. What's happening? So we have a high. This high, which is a little high. This is a lower high. This one is a lower high. This one is a lower high. This one is another lower high. This right here is the low that we said. This one is lower low, lower low, lower low, and lower low, and lower low. And now it broke this structure. You see this? It broke this structure, and then a little pullback. That means this is a higher low. This is a higher low. This is a higher low. So what happened? The trend picked up towards the upside from this point. But initially the trend was downside. This downside trend, I played the puts and I made 155K. Now it might not be clear right now, but let me move this. Look at this. See how beautiful this is? Exactly what I was talking about. Okay? That's how you spot. Now in the real time, spotting them is different. And I'll show you how to spot them in the real time as well. As I said, this video is going to be one and only. And you can draw trend lines, exactly what I was talking about. You can draw trend lines in the real time and see what the trend lines can do. And also, your indicators can help you. Check this out. 8 EMA was respecting the whole time. Check this out. This green line, every time it touched green line, it broke below it. The moment it closed above the green line, then it pushed up. Then it held the green line above. Okay? These are just guidelines that we use. You got this? Okay, that's good. Okay, so now we have spoken about the trends. We've spoken about, we have got our levels sorted. We know the trends. And now we need to, we know where the market is likely to react around the levels. We know which direction we want to trade, if it's the upside or downside, or just identifying them. We'll talk about this in detail as well moving forward. I'll show you on the charts and plenty of examples. We'll backtest this together. But you cannot just jump in blindly. You understand what I'm saying? Just knowing levels, where the levels are, understanding trends, it's not enough for us to just take a trade. You cannot jump in blindly. You need a precise trigger for your entry. And that's what we're going to cover next. Exactly how and when to enter a trade for maximum probability. Now, there is nothing that is 100%. If somebody tells you they have a 100% win rate strategy, they are bullshitting to you. There's no such thing called 100% win rate. Nobody wins all the time. If they were winning all the time, they will be going up like this. But we identified that nobody goes up like that. Everything goes up in cycles. You understand what I'm saying? And when everything goes up in cycles, that means understanding that nothing is 100%. It's probably 70, 80%, maybe sometimes 50%. So my strategy that I'm about to show you have about 79% win rate. That means out of 100 trades that you take, 79 are going to be winners. 21 are going to be losers. So now it's on you. Like if you respect the stop loss, let's say every win we make, even if you, let's say every win you make $1, which is stupid. Every win you make $1. Every time you lose twice as much, which shouldn't be the case. It's usually the other way around. That means for 79 wins, you make $79. For 21 losses, you lose $42. You're still profitable, okay? But in reality, you should always win twice as much as you're risking. So this numbers become a little bit more wild. You understand what I'm saying? In this case, I think it becomes $316. I could be wrong with maths. I'm not the best with maths, but I think it's 316. Okay, so you lose $2 on every trade that you lose. You make $4 on every trade, and now you're massively profitable. Okay, that's how trading works. But now we are going to talk about entries, because entries is everything. Okay, so let's make it more simpler for us. Let's make it more relaxing for us. After this, I'm going to show you plenty of charts, but I'm going to make it. Again, we're going to speak on the whiteboard because it's so freaking important. It's probably one of the most important things that you're going to learn ever, how to enter. Then we're going to talk about how to exit the trades, how to manage the risk properly, and how you can keep on making money moving forward. Okay, now let's talk about entries. Now, what is entries? Entries means at what point are you going to enter into a trade? But you tell me, at what point do you enter the trade now? If you trade now, what point do you enter the trade? The answer is probably going to be when you feel FOMO, when you feel like missing out, or you do not have a proper, well-structured, scientific approach to it. We have a scientific, psychological, based off what other people would be doing approach, what smart money is doing approach. Okay? So now the rule is, there's some rules that I use. Like for example, the first rule that I use is called, please write this down. Sometimes I will go against it, but if you're a total beginner, you should follow this, okay? First 15 minutes, and I'll show you why and when it's okay to go against it. First 15-minute rule. First 15-minute rule simply says do not trade the first 15 minutes. Because the first 15 minutes is called price discovery phase. Now, what's price discovery phase? Price discovery phase simply means like every single day, like let's say if I go to the market, I do not know the price of this iPhone and I'm totally blank, not aware of it. I'm in price discovery phase. That means I'm going to go to the shop first. If I'm going to sell this, I'm going to go to the shops and I'm going to ask them, how much can I buy the iPhone for? He'd be like, oh, you can buy it for $800. Like, okay. Then I go to the other store. How much can I buy the iPhone for? You can buy it for $750. Then I go to the third store. How much can I buy the iPhone for? He said $820. So I know roughly around $800 is the price that I will buy. So that means if I want to sell, I want to sell somewhere around that number. You understand what I'm saying? So it's called price discovery phase. Everything is coming into the market trying to find the price. The buyers and sellers are just like having a conversation right now. First 15 minutes, that's why there's a lot of manipulation happening. Okay, I also call it I think its spelling is manipulation. Manipulation phase. Manipulation phase simply means when the market is in a manipulation phase, you will have wild movements up and down. You can't judge, you can't understand. Understand? Okay, that's good. So now first 15-minute rule is done. That means do not trade within first 15 minutes. That's when the market is in a price discovery phase. That means buyers and sellers are continuously fighting with each other. We don't want to fight. Hey, let them fight, let them win, and then we'll be like, okay, I want to bet on you. Think about this. So buyers and sellers are fighting. You let them fight. One of them will win, and then you bet on the winner. This is the only game where you can bet on the winner after the winner has already won. Think about this. All right, the second rule. Second rule is called first 2-minute rule. Now, what's first 2-minute rule? The first 2-minute rule simply says, okay, by the way, before we even get into this, there's multiple types of time frames that for the entries that you're going to use. Okay, and remember where before we spoke about the time frames and I gave you 60-minute in the pre-market. Now that we are getting into entries, I need to speak about the actual rules that you need, or things that you need. So what I'll do is I'll talk about this in a second. Let's talk about the time frames, okay? Because these are time frames for you to be able to trade now, okay? Now time frames that I use 2 minute chart, 5 minute chart, and 10 minute chart. I believe in grouping them together, okay? What I mean by that, grouping them together, that means I use 2 minute chart, just 2 minute chart by itself. 2 minute chart, and I'll also use. I'm gonna make it a little bit simple for you, okay? I know this might be because I'm talking from experience, and I need to understand that you do not have that right now. 2 minute chart, I trade from 9:30 Eastern time to 10 o'clock Eastern time. Okay, first 30 minutes of the market open, that's when I'm on a 2 minute chart. 5 minute chart, from 9:30 Eastern time to 11 o'clock Eastern time. Okay, that means I am watching these together. You understand? First 2 minute chart only stays for 30 minutes. Then I'm watching 2 minute and 5 minute together. Okay, and then I'm watching the 10 minute chart. I'm watching for actually you can say this probably till 4 p.m. Why? Because I'm in a way watching 5 minute chart all day, and then I jump on a 10 minute chart at 11 o'clock in the morning Eastern time to 4 p.m. when the market shuts. Okay, so now what does that mean? That means I'm always watching 5 minute chart. 2 minute chart comes and goes. 10 minute chart comes and goes. You understand what I'm saying? But I'm always watching 5 minute chart. 5 minute chart, like sometimes 5 minute chart plays with them. 5 minute chart goes and plays with them. Okay, it's like an all rounder. All right, you understand what I'm saying? You wrote it down. Good. All right, let's get to the juicy bits now. The rule number 2, the one that I spoke about before. The first 2 minute candle rule. So the first 2 minute candle rule is super simple. That means if your pre-market high and the pre-market low, remember the one that we marked before? This is pre-market high. This is pre-market low. If the pre-market high or pre-market low breaks within the first 2 minute candle, that means if the 2 minute candle is able to break the pre-market high or pre-market low, that stock is going to be on our watch. So out of 10 or 15 names that we trade that I showed you before, if within first 2 minutes, if I see pre-market high or pre-market low break on whatever name, I'm going to watch that because there's some momentum behind it. They were able to break above or below the most critical level that we had on the chart for now. Okay, so that's called first 2 minute chart rule. Okay, you got it? I'm just explaining one more time. If the pre-market high or the pre-market low breaks within the first 2 minutes of the market open, for example, we're going to 2 minute chart right here. Let's go to, in this case, check this out what happened. The market was choppy. It was up and down like a seesaw. Why? This is the pre-market high, right? 4 o'clock when the market opens. This is a pre-market low right here. What did the first 2 minute candle do? This is a candle. It didn't break above pre-market high or below pre-market. It was in the middle. So don't worry about this. Okay, let's go for another example. Even this day, the market was quite, I told you before, weak momentum. It couldn't break the pre-market high, pre-market low. That's okay. But in this case, what happened? The market was nicely trendy. But what did it do? Let's draw the pre-market high or pre-market low. Let's go here. This is where the market opens. Let's draw the pre-market high, pre-market low. So this is the pre-market high. This is the pre-market. This is the pre-market low right here for you. Probably even lower a little bit right here. Okay, so this is the pre-market high. This is the pre-market low. Let's see first 2 minute candle what it do. Come on, darling. All right, it broke above the pre-market high. Now this becomes my main watch that I'm gonna watch. There probably are 3 or 4 stocks that break pre-market high or pre-market low. I'm going to watch them. You understand what I'm saying? That's it. Now I'm watching this. And it was nicely trendy. Check this out. And I'll show you how to trade all of this. Don't stress about this, okay? But that's good. As long as you understand the first 2 minute rule, that's the most important bit right now. Okay? Now, let's go to the next one. Bro, we're covering some ground here, man. Like, we have spoken about so much stuff. Check this out. We've spoken about so much stuff. Hopefully you like enjoying this. Hopefully you like, oh my god, bro, this is really good. I'm loving it. Nobody breaks it down like this. I know, because people like making things complicated. I don't understand complications, bro. My brain just shuts down like pam 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 pam. The moment things are complicated, I run. I'm like, I need to break it down. I need something broken down properly, like so I understand. All right, now let's talk about ORB. Okay, ORB. Remember the indicator that we set up ORB on our charts? What's ORB? Remember this indicator? Oh, you might have forgotten. This indicator that we set up on our charts before? Okay, now let's break it down. What's ORB? You might already know this, you might not. I'm going to assume you do not. ORB simply means opening range breakout. Okay, opening range breakout is ORB. Okay, that means opening ORB, opening range breakout. So what does that mean? Opening range breakout can be of multiple candles, whatever you want to do, but we like to use 15-minute ORB. Back tested it, I know that it works. So what does that mean? That means you need to mark the highest point, or the lowest point of first 3 5-minute candles. You do not have to do it yourself. The indicator does it for you. That's why I gave you the indicator. But let's say if the first 5-minute candle is like this, that's what it will do for you. The second 5-minute candle is like this, and the third one is like this. Okay. In this case, what would be and let's say if this is maybe make it more easier. Let's say if this candle is the red candle, so you understand properly. This candle is a green candle, and this candle is a green candle. So which one do you think, what point is the highest point out of these three? Right here. What's the lowest point right here? Right here. That means this becomes ORB high, this becomes ORB low. The indicator does it automatically for you. How bloody beautiful. Because we're on a 2-minute chart, so go on a 5-minute chart, you'll be like, okay, this makes sense. So first 3 candles. So right, first, second, third. Okay, check this out. First 3 candles. What did it do? It marked a green line and a red line for you. So now you know. It automatically does it for you. That's why I gave you the indicator, because it's really good indicator. Okay. So now we do not need to manually mark it. Okay. So now you understand ORB. Sometimes what happens is when the prices get stuck within the ORB, it will be super choppy for the rest of the day. Sometimes what happens is you can use these ORBs to actually take a trade. There's a lot of different strategies. There's a lot of different ways. We'll back test all of this. But as long as you understand, these levels are critical levels for algorithms. The smart money algorithms, they are buying or selling around these levels, which is why these levels get respected so significantly. Okay? You understand what I'm saying? All right, done. So we spoke about ORB. Now I want to speak about, and then I'm going to show you the charts. After that example, then I'm going to show you the charts, okay? Now called, this is good. This is a good one. The PB and the retest. Fuck. Retest. The pullback and the retest. What's pullback and the retest? Let's say if this is a level, a stock is breaking out of a level, it breaks out of a level. Come on. If a stock is breaking out of a level, it breaks out of a level, and now you need for it to pull back a little bit. Okay, yeah, you want to have a pullback. Now at the pullback area, let's say if a level is there, it can break and retest. You can use multiple things now. You can use ATMA is sitting there. And you're like, okay, you can bounce off this. There's a critical level here as well. So now, let's say if the ATMA, which is a green line, is running right there as well. And this is the yellow line that we have marked on our charts, which is our hourly level, remember? And then you have, then you're like, okay, you know what? There is, wait, let's write it down here. ATMA, we'll just say HR hourly level. What else is going through? You're like, okay, the trend, and this is another point you need for the trends called Fibonacci. Now, what's Fibonacci's? Fibonacci is when the big move has already happened. When it starts pulling back, you can draw Fibonacci's. I'll show you on the charts. You can draw these Fibonacci's after a big move has happened. Like for example, let's say if this is if this is a big move and then I pull in back, and now you do not know where it can pull back, go on the left hand side right here, Fibonacci retracement, and you can click on it. You can click here to try to read more what it is. But I promise you, don't stress. I'm telling you. Again, you want to study more about this. What is Fibonacci? You can go watch the videos. People call 0.6. Again, this is how you draw it. Place it on the point where the trend started during the market hours. Pull it all the way to the point where the market started pulling back now. So now the market is pulling back. Let's say if there is a 8 EMA running here, there's a critical level sitting right here. Now prices come and you're like, okay, 0.236, 0.3. By the way, these are my settings for Fibonacci's. Please make sure you have exact same settings. This is super important. This is super important. That's why they're different color. 0.236, 0.382. Okay, so now all these critical levels are sitting here. There's big chances the prices can bounce. This is called us being able to tell where the price is going to bounce. We use Fibonacci's. But now, let's say if there is a, for this critical point, because we have Fibonacci level right sitting here, for this critical point, let's say we have Fibonacci point right there. We draw the Fibonacci, we got our first level. Okay, so that means Fib level is there. And then you like, it turned out there's also ORB high sitting here as well. It broke above the ORB high and now it's coming back and retest. So you're like, okay, it's ORB. There's plenty of reasons why this can work. This, when you have more than one reason to jump into a trade, that is called confluence. Okay, that's called confluence. That means there's a confluence why it can work really well. And you buying here will make you rich. You understand what I'm saying? Because most likely you are going to see massive green candles here. Because there's so many reasons why it can bounce. Now, why would it bounce though? What's the reasoning behind the bounce? Because people who trade ATM retests, those people will be jumping in. People who trade hourly level break and retest, those people will be jumping in. People who trade just using Fibonacci's, those people will be jumping in. People who trade ORB break and retest, those people will be jumping in. Now, all of these people are jumping in. What happens then? There's a lot of buying pressure. There's 4 types of people buying. When everybody buys, what happens? Prices go up. When everybody starts buying an iPhone, what happens? iPhone prices go up. What happened in COVID during Corona time? Everybody started buying toilet papers. Toilet paper prices went up. And that's literally it. Okay? You do not want to chase the breakout. Some people want to buy here. I just never understand. Some people want to buy here at the breakout. No, you don't want to do that. No, that's okay. We know how we're trading. And I'll show you examples of this as well. You understand what I'm saying? And this is going to be good. So when we're about to enter the trades and, we're selecting the option contracts to trade, there's a lot that goes into it, right? There's like a lot of stuff happening. You're like, man, there's so much happening. I understand there's so much happening. There's a reason why there's so much happening, because right now you're totally new. You feel like there's so many moving parts. No, it's not really. Like, you know how to trade this. Prices are coming here, touching here. You go to your contracts and you select the contracts which you're going to trade, and that's it. And then you trade. You trade those contracts. Literally it. You buy one contract, prices go up, you sell, you make some money. That's it. Okay? All right. Now, let's go to, do you do limit orders or market orders? When I'm trading, I do market orders because I want to get into the trade right now. Okay? I want to do market orders because I want to jump in the trade right now. All right? We are going to do a lot of chart testing now. Now listen, I'm giving you the exact blueprint right here. But knowing the information here and executing it live when the market is moving fast are 2 very different things. Because I understand when you're watching 10 different stocks as a total beginner and 10 of them are giving you the entry, and now you have to select 10 different option contracts. You're like, man, which one to trade this? Everything is moving so fast. You see what I'm saying? Option contracts needs to be loaded. You need to press the right buttons to buy the contracts. Which contracts to buy? Which strike prices to buy? Which buttons to press? Is the volume enough on those contracts? Is there too much slippage happening? will this trade hit my stop loss? If what happens if all of a sudden all these trades hit my stop loss? What happens if I'm able to if I'm trying to get in 10 contracts and I'm not able to get in even one contract because I'm doing something wrong? There's so much information. That's what I'm saying. When the market is moving fast, executing this stuff and having the information to different things, like information on YouTube, information of you watching this video can only do so much. You understand what I'm saying? If you want to see me apply these exact entries, trends, levels in the real time by watching my screens while I'm day trading live, like you can watch me do this stuff live. If you want to be a part of a community of professionals who are doing this together, keeping each other accountable, sharing live trades with each other, check the first link in the description box below. You can join my inner circle, see my screen, trade alongside with me every single day. The community, the real-time execution cannot be replicated in a video. Check the link below because it's going to change your game. These are what we sort of things we do in here, bro. Check this out. We have levels every single day that we are sharing, okay? Then the video where the level's coming from. Then we are talking about the swing trades, something that you can sleep on overnight. And, you know, these are like massive wins. 100 to 300% means your 1,000. This 300% simply means you have $1,000 position size, 1,000 turned into I think 4,000. You made $3,000 or some stuff. And then we have there's so much happening, man. Like every single weekend, because there's so many things are happening every single day, every single week. So we have a weekly watch list. Now, what's happening in this weekly watch list changes everything. So every single weekend, we sit down and I give my people, my students, a detailed analysis of what's happening in the broad market, what's happening technical analysis, is there any news coming out, what there needs to keep an eye on, where are the most important things happening this week, which earnings are happening, which companies are reporting their earnings, the Fed chairman, what are they doing, and then I give them the charts, the lines. Why do I think which levels can hold? Then I give them the exact reasoning why do I think those levels can hold. And I do that. This is like a 30-page report that we do every single freaking week. Like it's not just for, it's for currencies, it's for gold, it's for oil, it's for this, treasury bonds. Now, with proper explanation, what I think can happen if this happens, because most of the people do not know that this stuff matters. This is the weekly stuff with proper detailed analysis, and this is super important, especially when you're first starting out. You understand what I'm saying? And then we have trading stations where people are sharing their trading stations, like all my people who are live trading, who are fully professional traders at this stage and they trade full-time for a living. They're sharing what works for them, what type of computers they're using, how they set up those computers, what you need to do in order to set up those computers, okay? And then we have the gains channel, like literally people sharing how much money have they made. He said, when you look at same watch a year later, it'll tell a different time. This my wife told me. He said, a lot can change in a year. Do the modules. Look at this. This is June 2026. He made $23,000 in a week. He made $4,000. He made $25,000 in just one freaking week. And he takes Fridays off because he likes long weekends. Think about it. You choose when you want to trade. And this was last year. In June 2025, he was losing money consistently. And check this out now. You understand what I'm saying? This is the power of having a proper community. Someone making $10,000 in a day, 176. If you have a small account, big account, this is it. You understand what I'm saying? Like, this is how you meant to do this stuff, bro. This is how, like, the trading floor where we are talking to each other, we are helping each other out. And then, of course, then comes the questions. Any questions that you have, we are there to help you out. But again, all I'm saying is this. I'm not, again, it's saying, oh my God, you have to do. No, when it's just, I have a very good thing going and I can get you the results faster. So check the first link in the description box below. Let's get back right to the course now. So now we spoke about the entries. We spoke about all of this fancy stuff. We spoke about levels, trends, entries. But once you enter the trade, you need to worry about exits. Because I was about to show you the charts, but I'm like, we haven't spoken about exits yet. If you do not know how we're going to exit when we go on the charts, you will only know how to enter. Well, I was like, okay, you know what? Let me give them exits and then I'll show them the charts. So it's way more smoother, right? So let's talk about exits so we're able to actually backtest properly. So let's talk about next point, exiting the trade. When do you exit the trade? How do you protect the profits? What's the risk management? Okay. Now, a lot of people exit the trades because they feel good. That's not enough. They're like, oh my God, nobody goes broke. Have you ever heard somebody say, nobody goes broke taking profits? Let me tell you something. Nobody gets rich taking small profits. You have to let your runners run. So now, I told you before, I'm using levels. I'm entering somewhere in the middle. I'm using levels where other people are entering. I'm using levels as profit targets. I'm taking profits at those levels. The hourly levels that we drew in the step number 1 are not just for, they're not just to help us for the entries a little bit break and retest. They are your primary profit targets. Okay? That's literally it. That would be first profit target. Second would be any critical indicator that I showed you then. Remember all the indicators that I showed you before? Any critical indicators, if you're taking a trade towards the downside, if there's an indicator approaching, for example, let's say for some reason you are in a downtrend right here, this 200 moving average, remember? This will be my profit target right here for my puts, right here for my puts. Okay, that's how you meant to trade. Okay, so the first profit target are my hourly levels. Second one are any indicators. I'll show you when I show you on the charts. It'll make way more sense. Okay, so now that we know this, there's another thing called negative. This is called risk management. Okay, negative risk management. Now, what's negative risk management? Negative risk management is super simple. It's super simple. Negative risk management simply suggests that if your entry is, and this is going to make so much sense for you, if we have these hourly levels set up on our charts, let's say if you have entered the trade somewhere at the break and retest right here, you have jumped in, let's say 10 contracts, and those contracts are, let's say $300 each. Okay, they're $300 each, 10 contracts. Now you took the trade, it goes and hits your first profit target. This is your profit target number 1. Okay, you are going to take 50% off. Okay, you're going to take 50% off. Let's say by the time it hits this target, the contracts are sitting at, let's say, $450 each. You're going to take 5 contracts off at $450 each. Okay, so now you made $150 a contract. $150 a contract times 5, you made $750 already. This is your profit for the day so far. You still have 5 runners running. But what happens if the stock prices reverse here? What's your stop loss for the 5 contracts that you still have? The stop loss is break even. That means you're not risking any. What's break even? The point of your entry for the contract. That means you're not risking any of your money to let these runners run. What happens if it pulls back all the way till here, your break even hasn't triggered yet, and then it pushes back up again? It goes up here, hits your next profit target. Now you're going to take another 50% off. So now you have, this is your profit target number 2. But you were holding these literally with 0 risk. This is the only time you're ever going to have negative risk. Like literally markets paying you to let your runners run. Okay. So let's say how are you going to take 50% off of 5 contracts? You can't. So you're going to take 3 contracts off because you can't take 2.5 off. You have to either be 2 or 3, right? So you're going to take the bigger chunk, 3 contracts off. By this time, because it made such a big move, these contracts might be sitting at $750 each. Okay, so you're going to take these off. So now that profit is about $450. Now $450 times 3 contracts that you took, that's just a profit. You understand? That's $1,350. And you still have 2 runners running. And then what happens is all of a sudden it starts pulling back, and it hits the break-even price. The 2 contracts came back to the $300 price, you sell. Like, that's okay, it is what it is. But calculate now. How much did you make? $1,350 plus $750. How much did you make? $2,100 with a $3,000 position size. Your position size was $3,000. Now, you might be like, oh my God, I don't want to risk $3,000. No, you're not risking $3,000. That's why you have stop losses. And I'll talk about it as I show you the charts. you probably are risking 20% of that. That means you're risking $600. Now, to risk $600 and stand to make $2,100, that's pretty good risk to reward. That's about more than 3 to 1, 3.5 to 1. That means you're risking $1 to potentially make $3.50. That's only possible because of negative risk management. Imagine if you sold everything at the first target, you would have made only $1,500, not $2,100. That $600, I promise you, adds up. $400 a day for 250 trading days in a year, it's $100,000 in a year. You understand? That adds up really, really quick, right? So stop loss placement is everything for this. That's it. If you cannot place the stop losses, you're gonna have really, really hard time. All right, and that's what I'm gonna break down for you moving forward. All right. So now comes the question. Hey man, I know this stuff. This is cool and all. How do I know how much money should I put into this trade? This question about position sizing, right? Again, it's a beginner course, so I gotta talk about everything. Position sizing, and we're getting into quite advanced stuff right now. Position sizing is done using this framework. Okay, it's called bell curve framework. Now, bell curve framework is super, super simple. What does it say? A bell curve, just like a bell curve. Okay, every single morning, every single day when you start trading with this very small size. That's how I do it. There's two things that can happen after your first trade. For the first trade, small. There's two things that can happen. Either the trade goes green or red. Let's say if the trade is green, okay? Let's say if you have, again, we have calculators and everything for, and this is insane. You're gonna be like, bro, this is so good. Check this out. We have a KCU AI, right? So I'll ask it a question. I said, you can ask it a question and it gives you the answer. Hey, can you help me create a position sizing bell curve for different days and intraday for my 10K account? And let me tag the thing, send. Look at this. Because every single day the position sizing needs to be a little bit different. Every single day, every single trade, position sizing has to be different. Check this out. This for education purposes only, absolutely for 10,000 account based on K Capital Trading Framework. This is trained on me. All right. With $10,000, your maximum position size should be $2,000. The ceiling until you grow the account to 20,000, 400 to 600. This is the trade 2, trade 3, trade 4. Stop loss if you take 3 losses in a row. And every single day, this is how you should be doing it. Would you like me to clarify or explain the psychology behind each day? I don't need the psychology, but how do actually, let's say, yes, please explain the psychology, and it will give you the psychology. It'll give you the answering reasoning why this works the way. So it's easier for you to make position sizing anyway, and you can have a $3,000 account or whatever the account you have. Okay, so now here's the thing. Let's say if you have whatever position sizing you have, your first trade of the day should always be small position size. If that trade of the day works, okay, that's what I tell all my students as well. If that trade of the day works, then increase your position size for the next trade. Okay, second trade will be a little bit bigger. If that trade works, increase the third trade. If that trade works, increase for the fourth trade. You understand what I'm saying? Because when you're winning, you want to keep on going, right? But what happens if your first trade of the day is red? This was for green. First trade of the day is red. What do? This trade right here that we had, the first trade is red, it automatically comes here at the top. That means the second trade has to be smaller position size. If that trade doesn't work out, smaller position size. Now you took 1, 2, 3 losses in a row, call it a day. Don't worry about it. That's called bell curve framework, and this can change the way that you trade. And this, oh my God, I gave it such a beautiful answer. Okay, I did this. Great question. Psychology is this. Monday psychology is this. Over the weekend, you might have been listening to motivational content, podcast, and hype. You came to the market thinking I'm going to prove something. I'm not a piece of shit. I'll show the market. The overconfidence leads to take a huge first trade and get demolished. They spiral downward for the week. Solution: start small on Monday to protect yourself from this emotional confidence. A small loss stings less, keep you in the game. And this is Tuesday, Wednesday. This is Thursday, Friday. You understand what I'm saying? And then you can keep asking more and more questions. He'll keep on giving you better and better answers as he understands you in detail. But okay, so this is called position sizing. This is called bell curve frameworks, and it's super important. Okay, you understand what I'm saying? Now let's talk about the actual charts now. Finally, because you know everything, you know how to draw levels, you know how to mark the trends, you know how to do the entries, you know how to do the exits, you know how to do the risk management, you know how to do the position sizing. We've spoken about everything, right? Levels, cool, hourly levels, trends, higher highs or higher lows, um, and entries and exits. Entries, we spoke about it. We're using breaks, retest, Fibonacci's, ATMAs. Exits, we're using levels or indicators. Risk management, what did we speak about the risk management right here? Negative risk management, right? What is this? Negative risk management, letting your runners run, and the stop losses. And then position sizing, bell curve framework. We spoke about all this. Now we have mentioned a lot of theoretical parts. Now, when the moment we go and look at the charts, everything's gonna be like, oh, this is so good. So let's go, and without wasting any time, let's jump to the charts. All right, now we're here. We have covered a lot of freaking ground, but I think all the theoretical version is over. What we're about to do is we are going to do actual backtesting. Now, a lot of people do backtesting very, very different. I'm going to tell you how we're going to do backtesting. Backtesting does not mean trying to find out out of 100 times how many times the trade worked. Backtesting means trying to live the trading day in the past, trying to live it again, to see what happened, to see if you can learn something from it, to see if you can understand what was going on in that given moment. And that to me is backtesting. People think backtesting is maintaining records out of 100 times, how many times it's traded. No, it's, yeah, a little bit of that, but that is advanced. When you get, when you get a little bit more advanced, yeah, cool, you can do the numbers. But otherwise, backtesting mostly is trying to live another day. For example, if you just go one day at a time, that means the day the market is open, you're only learning for that one day. But if you can backtest 10 trading days in one given day, that means you're learning experience from 10 days in just one day. That's what I mean. Trying to live the trading day, which has already gone by, again, by looking at the charts. Do you understand what I'm saying? Now, what we're going to do is, rather than me finding the best, just to showcase that I am, the best in the world and all this, I can go ahead and find out the best possible days, best possible trades, and just show you the screenshots, like most of the guys do on the, put together courses or whatever they do. But what I would rather do, and this is the thing I personally feel, what I would rather do is I would rather give you the total data. What I mean by that is we'll pick one day, okay, we'll select one day and we'll go for like, probably 10 days. Every single day, like we'll go draw levels, we'll go mark on the charts, the entries, the exits, and we'll do all that. Okay, so without any further ado, rather than picking the best possible days, we're going to pick one day and then we're going to continue, keep going, so you can learn the best possible days, how it happens. Maybe after a huge winning day, the next day market maybe was super choppy. So that's exactly what we're about to do. And if you do not understand what I mean by this, you'll understand in 2 minutes. All right, just stick by my side. I promise you this is going to be the best freaking thing that you do. All right, what we're going to do is we're going to backtest SPY. Okay, that's what we're about to do. I just want to really quickly go over, I think we spoke about the time frames and all that. For this example, for this case, what we'll do is we'll just stick with 5-minute chart. We won't go 2-minute, 10-minute and all sort of fancy stuff. We'll just stick with 5-minute charts. And one of the easiest ways that I know how to do backtesting in a way is, and this is going to be like, yeah, well, bro, rather than going like this and trying to pick days, because now you have you already know the market went up, you'll be biased. You understand what I'm saying? So what I like to do is I will go on an hourly chart because that's where we're going to draw levels, and I'll show you how to do so. I like to make it like this, make it super small. Let's remove all the drawing. Let's remove everything. What I like to do is I like to make the chart super small so I do not have any idea what happened on those given days. So I'm making the chart super small so I have everything looks like a one line. I have no idea what's happening. Then I'll go to the replay feature at the top. Okay, and then I'll just randomly, literally just randomly draw on, like drop this anchor. I'd say this is like an anchor. I'll randomly just drop this anchor on one given day. Does that make sense? Like for example, for this given case, we probably, let's drop it right here. What is this? February 23rd, 2026. All right, right here. Now we have no idea what the day did. We have no idea what was happening on this given day. What we're about to do is we are gonna simply wait for 8 a.m. 8 a.m. candle. Now we can go ahead and start marking our levels. Now, one of the easiest ways you can mark levels is simply going at the top right here and selecting line chart. Okay, select line chart. Let's remove all the indicators and we'll set up the indicators again. Okay, actually, instead of doing all that, let's set up the indicators, the most important indicators that we need in this case. The first most important indicator that you need is called volume. Okay, just volume. I think I've already done indicators at this stage so far in the course. If I haven't, hey, now we're doing it. I forgot. That was like a few days ago that I recorded. Let's just do it again. All right, volume. I'm pretty sure we have already covered this, but hey, doesn't matter. Okay, second thing that I would do is I want to add VWAP, volume weighted average price. Just click on it. Now let's do SMA. Just search SMA, simple moving average. Just click on it twice. Then I like to do EMA, moving average exponential. Just click on it twice. Okay, and then I will set up ORB. Just search ORB, and this guy ORB Flux. No, ORB ZZZ Crypto 123. Just click on it once, and then we'll do open price. Open price, but this guy discount rate. Just click on it once. What else? What else do we need? I believe that's pretty much all of it. Yeah, that's. I think that's all of it. We are. Yeah, that's all of it. Okay, so now what we're gonna do is we're gonna go and change the settings of all this. VWAP. Let's go to the VWAP settings. Make sure hide VWAP one day above. H plus L plus C divided by 3. That's good. Band multiplication off. Standard. In the inputs, we're gonna change the color to white because it's much more easier to see. Okay, and I like to make it a little bit thicker because it's a super important line. Visibility, I'm gonna turn everything off but the minutes. I'll leave it on minutes, nothing else. Okay, this is the VWAP settings. Everything good to go. Good to go, good to go, good to go. Okay, we sweet. Press OK. Okay, now you do not see here because we will only see it on a smaller time frame, not on an hourly chart. Let's go. This is SMA. I like to do first, we'll do 200, close, everything can stay same. Go to style. I like orange and I like circles. Okay, rest everything can stay the same. Make sure the source is closed. Visibility can stay like this. Okay, let's go another one. This is I will do 400 moving average. Go to style, change the color to like maroonish, and we'll change it to circles again. And visibility, I want to turn everything off. Literally turn everything off. We don't want to see it anywhere but the minutes, from 5 minutes to 5 minutes. We just want to see it on 5-minute chart, nothing else. Okay, press OK. Now we will go we'll go EMA. All this can stay. Styles, I like to change it green. Okay, inputs, change it to 8. Close, everything else can stay the same. Green, this is good. Press OK. Next one we'll do setup. I like this one, red color. Inputs 21. Visibility can stay the same. This is good. Okay, okay. ORB, let's go change this. ORB high, ORB low, this is good. I like lines. This is lines is good. Everything else, inputs, change it to 15 minutes. 9:30 is when the market opens, the Eastern time, 9:30 to 9:45. Press OK. Actually, go back to the settings again. Visibility, we want to turn everything off. Leave the minutes on. That's it. We want to just have 1 to 15 minutes, nothing else. OK. And then go to the open price and change the settings here. Go to style, turn yearly open, monthly open, weekly open off, daily open, keep it on, yellow. And we want to see just simple line. Go to visibility, only have it on. Only have it on minutes and seconds. Press OK. Now we're good to go. The indicators are set. Also for the volume, go to the volume, style, volume MA on, make the color yellow. Inputs, I believe you can make 5. Everything else can stay the same. Yeah, everything else can stay the same. Press OK. That's the average volume. If it's more than that, that means the volume is more ticking in. Now the charts look exactly how my charts were originally, yeah? Okay, now we are here. Now let's set up our the fancy, the levels, and then we'll go from there. Now let's do the levels first. Now I like to do is I always like to mark pre-market low first, then pre-market high, then yesterday's intraday high. Intraday high is this, then yesterday's, so far we see this. Okay, so we got 4 levels in. I always mark 200 simple moving average on the hourly chart. Okay, that's 200 simple moving average. I will always mark this and I'll always write down this is 200. Okay, that this is 200. 200 is one of those levels. It's super critical level. If you get an entry on this 200, like I'll show you. If we get an entry today, I'll show you. Okay, so we have marked. My always goal is above pre-market high. I like to mark 3 levels towards the upside. Below pre-market low, I like to mark 3 levels towards the downside. Do you understand what I'm saying? But now we can't see. We can't see anything. We don't know where the heck the price is. For upside, it's easier to see the levels. Above this, maybe the prices were bouncing over and over again here. So we can mark this level. Why? Because prices kept bouncing over and over again. Above this, prices kept rejecting around here. Look at this. Prices kept rejecting around here over and over again. So we got 3 levels towards the upside done. Do you understand what I'm saying? Once the 3 levels towards the upside are done, now we need 3 levels towards the downside. But I'm having a hard time figuring out the levels for the downside. What I will do is I will go to the line chart right here. Now look at this. Okay, this is a level, this is a level, this is a level. Now how easy it got for me all of a sudden to mark my levels. Do you understand what I'm saying? Super easy. Now I marked a lot of levels, right? What I'll do is I'll go back to the candlestick. Now we're gonna adjust this. Okay, this is good. This is good. This right here is all right because price is bounced here. This is good. This one right here, you see this? This level right here? I think we can adjust this level. The reason why I think we can adjust this level is because there's wicks right here. We always pay attention to the wicks. Right here. Okay, one bounce, second bounce. Okay, we moved it a little bit downwards. This one right here can stay as it is. And the level right here, this level can stay as it is. This level right here, we probably will move a little bit lower. I think we're good to go. Now, I understand we marked way too many levels. It was just so easy to find the levels. So it's easier for me to kind of go ahead and mark the levels, if that makes sense, right? So we'll probably also mark a level here. Why? Because prices got rejected. And every single day, by the way, every single day when I'm doing my trading, every single day, I think I told you before already, every single day when I'm trading live, every single day when I drop my levels in my channel with a video on where I'm getting these levels from. Do you understand? So I will always send my levels before the market opens, so people do not have to go like, oh, are these levels right? Are these levels wrong? Because drawing levels is everything. Okay, so now we have drew levels, and I'm pretty sure you understand, and we'll do more examples so it'll be more clearer. Now let's go ahead on a 5-minute chart. Let's switch to 5-minute chart, and what we're gonna do is we'll wait for the market to give us 9:30 candle. Okay, let's see. Go ahead, keep going ahead, keep going ahead. Okay, keep going ahead. Market about to open, or market opened. It pushed up straight away. Now here's the thing: market originally gapped down in the pre-market. Do you see this? The market had a gap down, massive gap down. It continued towards the downside. So a lot of people probably right at the market open are going to take some profits because maybe some people went short here and they're going to cover. So when shorting simply means making money when the prices are going down. All I'm trying to say is when the short positions are closing their trades, they have to buy those shares. You know how you normally buy first and then sell? They sold first, they got to buy and then create some buying pressure in the market. You understand what I'm saying? But I usually do not like to trade first 15 minutes of the market, especially when we see a massive gap because the market is in a price discovery phase. What is it? Price discovery phase. That means market is trying to find out which should be the new price after a massive gap down, massive gap up, right? So here we are. There's a level approaching. We're not in a trade. This is 5 minutes in. We're going to wait. Okay, let's see. Another 5 minutes. Okay, another 5 minutes are done. Now let's see another 5 minutes. Boom. That is 15 minutes done. Now we got a upside level, which is a ORB high. We got a downside level, which is a ORB low. Okay, so we can even mark this on your charts. You can even write on this ORB high. So you do not forget ORB high, and probably make it a little bigger so you see it, maybe even bigger. Okay, ORB high, and put it somewhere in the center so you actually see this. Okay, and this one is ORB low. Okay, so we'll do the same thing here. ORB low, 28, put it in the center. Okay, so we got the ORB high, ORB low. That means first 15 minute highest point, first 15 minutes lowest point. Now what we're going to do is there is 200 simple moving average. There's a 5 minute 200 simple moving average. So far there is no trade. Why? Because think about it. Market went up, then the buyers were in control. Now the sellers are in control. What's happening? Buyers were in control, sellers are in control. There's nothing happening right now. As of this second, there's nothing happening. Let's see who wins. This is the only game that I know where you can wait for someone to win and then you can place your trade. Think about it. Now let's see what happened in the next candle. Now clearly sellers are in control. Why? Because sellers have made a bigger move than the buyers. Okay, now sellers are in control. This is 200 simple moving average on an hourly chart. There maybe are some chances the prices might bounce here a little bit. You understand what I'm saying? It might bounce and goes back and retest this ORB. It might continue towards the downside, but that's not the entry. Our entry is going to be after a little bit of a pullback, but we need to see some sort of green candle. So what we'll do is I'll make it one. Okay, so this is 1 minute. Okay, made a big bounce. As soon as you start seeing green candle, what did I say? Grab your Fibonacci, place it from the point where the trend started to the lowest point available. The strongest rejects that we will get, okay, will be from 0.236 area. The strong ones we'll get is 0.382 area. Okay, these are my settings. Make sure your settings for Fibonacci is exactly this. And you can find Fibonacci on the left-hand side right here. Fibonacci, okay? Place it from the point where the trend started to the point where this is. Now what we're going to do is, this looks like a beautiful move. It can make a nice push toward the downside. Now your entry should be, if the ORB low fails, you jump into puts. Stop loss goes on the other side. What I'm saying here is, your entry for your puts, if the prices are 687, but you can do 685 puts, 686 puts, whatever it is, right? That means if the ORB low fails, this is the ORB low right here, I will jump in, my stop loss will go on the other side, and I will try to target probably the next hourly level or the pre-market low in this case. You understand what I'm saying? So, but my entry is not right now. I need the ORB to fail. Okay, so let's see what happens. Okay, so far my entry hasn't triggered yet because the ORB hasn't failed. This is the ORB, this is the gray line. Let's see. Not yet. Boom, I'm in the trade. My stop loss is on the other side of this Fibonacci point. Let's see. I'm in the trade. Okay, so far good. I'm in the trade. I'm in puts. You can make money when the market's going down. I'm in puts. Let's see what happens. It's a 400 moving average. Prices might go see a little bounce. Okay, a little bounce to happen. Now, as soon as you start seeing a little bit of a bounce, what do? You grab your Fibonacci and you draw a new Fibonacci here. Okay, prices can reject. Now, there's another entry that's getting triggered here. Why? Because you're already in the trade here. Second entry could be because the prices started bouncing. It went back and retested this 0.236 area and 200 simple moving average. There's a retest happening. It might trigger an entry and we can catch a trade towards the downside. You can add to the trade. Additions is where the money is made. Now let's see what happens. Now we added to the trade there. Okay, boom. You take some profits, you let your runners run. Do you understand what I'm saying? It's super simple. It's not as hard. Every single level that you see on the charts. Now the difference between people who do not make money and the people who make money is super simple. People who do not make money, they are using levels to get into a trade. We are using levels to get out of a trade. That means as soon as the level hits, we are taking some off. We are letting our runners run. And that to me is the absolute beauty of this freaking game. Do you understand what I'm saying? Now we'll take some more off right here. As soon as I hit this level, sweet, 1, 2. Now think about it. We entered right here. We've got a massive move. Do you understand? We use Fibonacci's. As soon as we start seeing a little green candle, what we're going to do is we're going to mark our Fibonacci one more time. All right, so far everything is good. So we can add to this trade. Green candle right here. What we're going to do is we're going to mark the Fibonacci from the highest point where the trend started to right now. Do you understand what I'm saying? Everybody on clear, okay? If the prices goes and touches this, either this hourly level, why? Because this prices are going back over and over again, touching this. There's a Fibonacci point. There's an 8 exponential moving average as well. There's a lot of confluence why this trade may work. If it bounces into this zone, we are about to do a trade again. We're about to add to the trade. Once the trade starts working, you want to keep on freaking milking it. That's all I'm saying. Boom. That's an addition for you. And let's see if it goes down even further. Okay, you're taking some profits as soon as it hits the level. Let's see. Okay, green candle. You start seeing a little green candle. Okay, never touch 0.5 Fibonacci. That's okay. Let's see what next. Can it goes and hit my next level? Boom. Hit the next level. Now you're holding your runners. Think about it. We entered at the ORB. This is the original. If you're in the original trade still, this was the original trade. Literally stop loss was on the other side, and this is the trade how it looks right now. Think about that. You risked about 61 cents to make $5 already, and that is the beauty of this. And it doesn't look like it's gonna stop. It looks like it might keep going. You keep taking profits. Boom, hit all the levels that we drew in the pre-market, and now you 11 o'clock. You're done for the day already. Think about it. Days like this is. Hang on, let me see. I have my journal sitting right here. February 23rd. How much money did I make this day? Let's find out. February 23rd. Because this is my real-time journal. Whenever I'm trading live, I'm always writing down how much money I made. February 23rd. I took SPX basketball. I took that. I took a few trades that day, actually. It doesn't say here how much money I made. But took a few trades and they absolutely printed. That week was a big week as well. So this week's, solid. Solid start. This is Monday. There you go. Do you understand what I'm saying? What did we do here? If you're confused, you're like, man, this is what the fuck? This doesn't make sense. I understand. You do puts, you take the trade, and you keep catching the trade as the prices are moving towards in your direction. Now, we call entire push. It might continue even further. We don't know. But our levels that we drew in the pre-market are good. Might continue. Okay, we started seeing a bounce. You should be done by 11. If you have been printing this in the morning, if you have made any money in the morning, by 11 o'clock, you should call it a day. You shouldn't try to just keep on pushing and trying your luck. That's all I'm trying to say. You should just be like, all right, it is what it is. I'm out. Okay. Now, I'm not saying there might not be any trades a little bit later in the day. Maybe let's see if it goes back and bounces to the VWAP. Okay, bounce to the VWAP. Might see a little reject. Okay, you saw a little rejection right there. That is good. These are good days. Okay. So what we're going to do now is we will, rather than me picking another trading day, let's just continue. We'll just keep on moving next. Okay, let's see. We'll go to the pre-market again. Hang on, let me just do here auto select interval. Okay. Let's go to the pre-market one more time. Again, we'll draw our levels around 8 a.m. Okay, let's draw our levels. Yeah, done. Tell me the levels. Say it out loud. First level, pre-market low. Second level, pre-market high. Next, yesterday's low. Otherwise, yesterday's high. Okay, this 200 moving average becomes a level. Okay, so above this pre-market high, we need 3 levels. We got 2. One probably this right here. Price is bounced. Okay, so we got 3 levels upside. Done. Now what we need 3 levels towards the downside. Do you understand what I'm saying? As we needed 3 levels towards the upside, we need 3 levels towards the downside as well. Okay, so we got pre-market low. We got 1 level right here. Now I'm finding it a little bit hard. Like, how can I? Where's the level exactly? I'll go to the line chart. Where's the level exactly? Just below, probably here, and then probably here. Now let's go to the candlestick and see if these levels are right. This level looks right, and this level looks right. Beautiful. Probably I'll say maybe a level in the middle somewhere here. Like check this out right here. Price has bounced a few times. All right. So we got 3-4 levels upside, 3-4 levels downside. We're good to go. Now this is 200 simple moving average on an hourly chart. Let's mark this. And now what we're going to do is we're going to go on a 5-minute chart and see how the market opens. First 15 minutes, there's no gap. On a previous day, we saw a little gap right here. There is no gap whatsoever in the pre-market. So that is a good sign, right? So what we're going to do is we will wait for the 9:30 to happen. Look at the market opened. It dumped straight away. Boom. That is good. Now, first 15 minutes, we are not going to chase any of this. Do you understand what I'm saying? First 15 minutes, there is no reason for you to jump into a trade because the price always in a price discovery phase for first 15 minutes of the day. So what we're going to do now is, boom, look at that. That's what I mean. Price discovery phase. You do not know if the buyers have won. You do not know if the sellers have won. Okay, that's 10 minutes in. This is 15 minutes in. Now we got the ORB levels. So this is ORB low. This is ORB high. Let's mark them. This is ORB high. Okay. This is ORB low. Okay. Now we got the ORB high. We got the ORB low. Now we need to see if we can find proper entries. Okay, so now there's multiple type of entries that you can take. Okay, whenever a price is like, for example, in this case, did you see how prices bounced off this? In this case, what happened was, let me actually really easily break it down for you. What happened in this case was, as soon as we broke out of this ORB, ORB low was sitting right here, first 15 minutes. There was a 200 moving average in the ORB range. So yeah, we didn't pay attention to that as much, right? But today, check this out. 200 moving average is sitting inside the ORB, has made a massive push towards the downside. Like this massive push towards the downside. Exactly the same thing. If that's happening, we haven't taken a trade. No. But what we can do is we need to see, because yesterday was such a bearish day. Okay? And pay attention to this. We need to see, because yesterday was super bearish, if we can spot little rejection plays today. And I don't know if we're going to see some. But how we can do, because yesterday was super weak, yeah? What we can do is we can switch really quickly to 15-minute chart, okay? And on a 15-minute chart, you can draw Fibonacci from the highest point of the day yesterday to the lowest point of the day yesterday, okay? We have done that? Cool. Now what we can do is we need to see on a 60-minute chart really, really quick. If we go on a 60-minute chart, if there is any critical zones sitting around these Fibonacci points. Right here, this Fibonacci 0.382. That's literally within the pre-market highs above that. No. Okay, so in this case, we ignore this. No problem. Don't worry about it. Now you'll be like, bro, what? That's why I'm backtesting in the real time. I don't even remember what happened on this day. You know what I mean? So, okay, we have ORB high, ORB low. So far, we are chill. No stress. Let's see if the prices can break above 400 moving average. Okay, prices clearly are rejecting this 400 moving average so far. All right, no stress. There's no trade whatsoever right now. As of this second, there is no trade. Okay, there's no trade for the upside. There's no trade for the downside. It has broken above the pre-market high. It's broken. It tried to break below the pre-market low before and then reclaimed and pushed above. There is no trade whatsoever. So far, we are chilling. I need a little pullback. I need some sort of pullback for me to take a trade. This is not it. Okay, let's see. Okay, price is starting to pull back. Now I see this pullback happening. What I will do is I'll grab my Fibonacci tool and I'll put it at the lowest point of the day. All right. What happened? No. right here. Okay, we put the lowest point of the day to the highest point available so far. All right, now what we need to do is we need to find a way if we can find our entry. If the prices for the pullback touched 0.5 Fibonacci, I'm not interested anymore. I don't want it. If the prices touch 0.5 Fibonacci, I don't want it. I don't want to take a bounce. I don't want to take a rejection. I don't want to take none of that stuff. Let's see how it goes. So far, priced push down. It touched. There's a huge confluence happening right here. Pay attention to this. There's a lot of confluence. There's a lot of reasoning why the prices can go from here. If the prices can get above this, in this case, because prices went nearly touch 0.5 Fibonacci. In this case, I would like to see is I would like to see next candle get above the 0.382. If that happens, I'll put a stop loss. Let's see if the prices can get above this. I'll put a stop loss probably below this candle, and I will target, first target I will do is probably the pre-market high in this case. So I'm risking by 60 cents to make 80 cents. It's not the best, but it looks decent. All right, let's see if the next candle gets above that. All right, next candle never got above. Pay attention to this. Next candle never got above, so entry never triggered. Now it has went ahead and touched my 0.5. I'm not interested in this anymore. Unless or until it is a total different setup, unless or until it's a total different trade that I'm about to take. Okay? For now, I'm not interested whatsoever on this. Upside, downside, I don't care. Because the prices are in the middle of the ORB. Prices are wrapped around this VWAP. It has touched the 0.5 Fibonacci. If it was really strong, why are the sellers taking over? So this is the time when I'm like not going ahead and trying to force a trade. You understand what I'm saying? I got above my retest. Okay, got above retest. I'm not in any trade yet. I just literally told you before. I'm not in any trade. If it goes, it's gonna go without me, and I'm okay missing a trade. My strategy is super simple. It shouldn't touch 0.5 Fibonacci. I can't do this stuff. All right, we'll find a trade a little bit later. That's okay. All right, pushed up. Let's see if it makes a new high. All right, it made a new high. Now what we need to do is we need to see if we can get a little bit of a pullback. It has broken above the 400 moving average right here. Let's see if we get a little bit of a pullback. Probably even a retest of this even a retest. We don't know where the next, up until the next red candle, we're chilling. Next red candle right here. Now let's draw the Fibonacci point right there. All right, let's see if we can, prices can come down into this little zone right here. I have 0.236 and a 400 moving average. If the prices come into this zone, I'll take a bounce with a stop loss on the other side. Does it make sense? It's literally that simple. I'm not making my life hard. I'm not making my life difficult. I'm just like marking the points. It's a critical level, 400 moving average. We saw how critically prices rejected earlier in the morning. It broke above. It might be a simple break and a retest of that zone. Okay, let's see if it comes down and retest that zone. Nothing yet. We're chilling. Boom. Came back, retested that critical zone. Now there are chances that we might see a little bit of a bounce. As soon as the prices get into this zone, I will be looking for a long entries. I'll probably target highest point of the day. I'll put my stop loss on the other side of this Fibonacci point. In this case, I'm risking 40 cents to potentially make $1.30. Let's see if the prices bounce here. Boom. Damn. There you go. Hit the levels. I rest my case. It's not meant to be difficult. It's not meant to be hard. It's not meant to be none of that stuff. If you find your critical levels, if you find your entries, you can trade that. Now we're seeing a red candle. What we should do? We should mark the Fibonacci at the top. Okay. Now there is another zone setting up right here. If the prices do come down into this little range, probably there'll be another trade. You understand what I'm saying? If the prices come into this little range, there might be another little bounce that we see. Why? There's a 400 moving average. There's 0.236 level. Let's see if the prices come down. Okay. Oh, boom, right here. And that maybe it will be the spot, but it's 11:30 already. We cost some trades, but that might be a spot with a stop loss on the other side. You take that trade again to the highs. Boom. Do you understand what I'm saying? You shouldn't be trading that late in the day, but because we didn't find any trade earlier in the morning till like 11 o'clock already, So we waited. Now you tell me how many people, how many of you guys would have gone ahead and lost a lot of freaking money earlier in the morning, when you were trying to find a entry while I was sitting there waiting. You would have taken a trade left, right, and center here while I'm just sitting there patiently waiting for my entry. I don't need to look at this. You gotta understand this, all right? A train leaves from station A, goes to station B, goes to station C, goes to station D. A is where the trend starts, D is where the trend finishes. Okay? This is where the trend starts, this is where the trend finishes. You do not need, people think you need to know when the trend starts, or they think that you need to know where the trend finishes. No. You just need to catch your piece from B to C. And if you keep doing that over and over again, you're going to get rich. You do not need to catch huge, humongous, insane moves. No, you got to keep doing this. Let the trend start. Wait for a Fibonacci retest. Once we see the Fibonacci retest, you can sell at your profit target. Hold your runners if you want to hold them with a break-even stop loss, but you understand what I'm saying. Okay? And if you keep trying to do A to D, A to D, a D is going to go up your A and you're going to scream. Do you understand what I'm saying? Please do not make that mistake. In this case, you made some money, call it a day. There's no absolute reason point for you to just stay there and try to see what's happening. Call it a day. I'm a huge believer in stock market is like a casino. Okay? Think of this like this. Think of it like this. Stock market is like a casino. Every single thing that you see in the market, everything is casino. You get chips from the stock market. Okay? You have everything as chips. The money that you have in your broker account is like casino, is like chips. You cannot use the chips anywhere else in the world. That is just that casino, right? You can't go ahead and buy a car with the chips, right? Because it's not legal tender. Same happens in your broker account. Up until you close, up until you walk away and cash those chips in. Literally, go to the counter, cash those chips in, whatever you won. It's not real money yet. For broker, cashing those chips means for trading, turning your broker off. Turn the broker off, you're done for the day, you cash those chips out, go ahead, enjoy your life. You understand what I'm saying? Because if you stay with, keep trying to trade and all this stuff, bro, you're gonna hurt yourself. You will get, market is too smart. This thing is too smart to know when you're vulnerable, and it will always try to find you when you're the most vulnerable so you can take your money away. And that is something that you should not do whatsoever. That's good. Okay, now let's go ahead to the next one. Are we here? This is done. Let's go to the 60-minute chart one more time and go ahead one more day to see what happens. Again, what are we trying to achieve here? What are we trying to do here? We're not making our life difficult. We're simply waiting for a best possible setup and we're taking the setup. You understand what I'm saying? It's not meant to be hard. Like, that's all I'm saying. Let's remove all the drawings. We'll go at 8 a.m. next day. Okay, this is 7 a.m. Let's go one more candle, 8 a.m. Boom. Okay, now let's mark. What's the first point that we're going to mark? Pre-market high. What's the second point? Pre-market low. What's yesterday's highest point? Right here. What's yesterday's lowest point? Right here. Okay, what's 200 moving average? Right here. Okay. Now from under the pre-market low, we need, one is 200 moving average. What else do we need? Maybe a second level here. Price is rejecting. Third level here. Okay, three, 4 levels downside. Now we need few levels for the upside. Why? Because there is nothing. Because we can't see anything. Alright, so we keep on going left till we start seeing something. Alright, keep on going left, keep on going left, keep on going left. Oh, right here. We can clearly see one level. Okay, let's see if we can find more. We can clearly see prices rejecting around this little zone. Clearly that's a second level. You understand what I'm saying? Now we need to find our third level. And you can't find levels? What did I say? When you are not able to find levels, rather than making your life difficult, all you should be doing is you should be going on a smaller time frames to see if you can spot your smaller entries, smaller exits. What I mean by that, I can't find levels. What I'll do is, check this out. I'll go on a 15-minute chart. Okay, because your goal is to be able to zoom in on the charts, because the hourly chart I was getting confused where the next level would be. So what did I do? I grabbed a magnifying scale and I zoomed in. Check this out. All of a sudden, I got a level right above. Okay, so I got my levels sorted for, like, I needed 3 levels for the upside. I got my 3 levels sorted. So I'm back on an hourly chart to see if that looks good. Okay, that looks good. Boom, spot on. Now I got my levels upside, downside ready to go. This is 200 simple moving average. Now let's go on a 5-minute chart and let's see what happens. It's just that simple. You don't have to make it complicated. There is no gap whatsoever in the pre-market. That's okay. Let's see. We'll wait for the market to open. Okay, so check this out. Market made a new pre-market high. This was a pre-market high that we marked before. Market made a new pre-market high for us now. So we'll adjust our pre-market high just before the market open. We adjusted the pre-market high. Everything's good. We still have the levels ready to go, whatever. We just adjusted the pre-market high, and now the market about to open on the next candle. Boom, it broke above the pre-market high. You can also do is you can write down here on the side. You can write down pre-market high, so you never forget what level it is. You can write down pre-market low. Okay, so you know what level these are. Okay, so now we're here. That's first 5-minute candle in. Second 5-minute candle in. Third 5-minute candle in. Okay, so what we need is we gotta mark our ORB high. This is the ORB low, and this is the ORB high. Let's write it down. Let's write on it. ORB high. And for this one, ORB low. Okay, so we got levels for the upside and for the downside. We're ready to go. Okay, let's see what happens here. Okay, prices broke out of this ORB. That's cool. I want to see if we missed this trade. Fibonacci, lowest point to the highest point. No, it touched 0.5 Fibonacci. No, yeah, that's okay. I'm not interested. I want to see one red candle to see if we can spot something. It broke the ORB high. Let's see. One red candle is in. Let's draw the Fibonacci from the lowest point to the highest point. Okay. Let's see if it actually, where does it want to bounce off of? Level of a bounce we need to pay attention to. Okay, went ahead and touched 0.5 Fibonacci. Guess what? I'm not interested anymore. I'm not interested up until you make a new high of the day. Now always mark intraday levels. Yesterday when we were back testing right here, prices rejected off 400 moving average, so we didn't mark it, right? Why? Because it was already a critical level, and prices came back and bounced off that critical level a little bit later. But today the prices are rejecting in the middle of nowhere. So whenever something like this happens, you mark your intraday level and you write down intraday level. So this is just an intraday level that we have. Okay, during the day, this is the way the price is rejected. All right, where any rejection that you see, huge rejection, like in this case, boom, you mark that. That's okay. Let's see what happens. What I'm thinking of the trade is going to be like yesterday, exactly like yesterday. What happened? The trade came after it broke above this and retested. What I am thinking is the trade is going to be exactly the same. Either it breaks above this intraday level, come back retest, or it breaks below this ORB level, come back retest. In my eyes, that's going to be the trade. Otherwise, I'm not interested. Okay? Either highs or lows, because you already touched 0.5. Otherwise, I'm not interested in trading chop. Right? Because everybody knows how to make money, but not many people know how to not lose money. And that's my goal. Not lose money. The money that's already mine, I don't want to give it back. So let's see here. Prices started seeing a little bounce, whatever. I'm not interested in any of this yet. Prices are super choppy. I'm not interested in any of this. I'm not interested in any of this now, as I told you. Okay, this is 11:30. It is what it is. There's no trade whatsoever. Let me go ahead and see what did I trade on 25th of Feb. Because I have my live. When I'm trading live, I'm journaling on this. Okay, Okay, I took a loss on SPY early in the morning. I took a loss on SPY probably. Where did I take a loss? On this given day, on my personal trading, I took a loss of 12%. I probably lost somewhere around here, maybe on a smaller time frame. But anyway, now I'm learning something as well while I'm explaining this to you. Think about this. This was never a trade. So far we are chilling. As I said, now prices are pushing above. Let's see if we can push above intraday level. Okay, it's super late in the day now. Prices pushed above ORB level, intraday level. It broke above intraday level. You clearly saw before it closed above ORB, came back, retested the ORB and made a push up. That could have been a trade, but in this case, we missed it. That's okay. Let's see if the prices can come back and retest this intraday level. Okay, one red candle, what do you do? One red candle, what do you do, guys? Grab your Fibonacci from the lowest point of the trend from the lowest point of the, what the heck? Yeah. Hang on, what the fuck happened there? This is what I was saying. From the lowest point where the trend started. What is happening here, bro? I'm so confused. Oh, I chose the wrong thing. Okay. Lowest point where the trend started to the highest point. Okay. So this becomes that little zone for me right here. Check this out. This becomes a little zone. Why? Because that's intraday level and also my Fibonacci level. If the price is coming that, I'm going to take a trade. That's what I'm trying to say. Do you understand what I'm saying? Now let's see. Boom, boom, boom. I'm in the trade. My stop loss is on the other side. In this case, would my stop loss would have been triggered? It probably would have. It probably would have. I'm keeping it real, but just because it bounced here, it doesn't. That still confirms my thesis is correct. If it comes back, retest this, I probably will jump back into the trade again because my thesis is right. Okay, I'm in the trade again. Let's see. Boom. There you go. There you go. All I'm trying to say is, you hold on to till the next level hits. Hopefully, the next level hits now. Boom. That's all I'm trying to say. Now, it was a simple thesis we had. We executed based off the thesis. Do you understand what I'm saying? It's not meant to be difficult, bro. I think we make trading super difficult just because we do not have the patience to wait in this little chop. Trade was exactly like yesterday. What happened yesterday? Broke above the critical level, came back, retest the critical level and the zone of the Fibonacci, and it bounced. And exactly today, broke above the Fibonacci, came back, retest, and bounced. Shall we do one more day? Shall we do one more day? Yeah, let's do this. Let's go on the hourly chart. Let's remove everything. We'll go 8 a.m. Okay, massive freaking volatility here. Okay, let's go 8 a.m. This is 7 a.m. This is 8 a.m. Okay, what we're gonna do, we are going to mark pre-market high, pre-market low. Okay, this clearly looks like a level 1, lowest point of yesterday, 2, highest point of yesterday. Okay, so we got 1 level, 2 level, 3 level. We need 1 more level here for the downside. I can't see anything. I'll turn this into line chart. Boom. So under the pre-market low, we got 1, 2, 3. Do you understand what I did here? Under the pre-market low, I simply made 3 levels for the downside. It's so much easier when you have a line chart on. It's so much easier to find levels. Like check this out. It makes life so much easier to make levels. Do you understand? And this is 200 moving average, so we'll mark the 200 as well. But for the upside, we need a few levels as well. All right, we'll go on a candlestick and see if we actually need help for the candlestick. It looks like levels are pretty spot on. Right here, boom, boom, boom. So we didn't need to go on a line chart. All right, now we got the levels ready to go. This is all looking good. Probably this one can move a little bit higher. This one looks good, looks good. Okay, so we got levels ready to go. Now what we're gonna do is we're gonna switch to 5-minute chart to see what's going on. This is the pre-market high, this is the pre-market low. Let's see. Market about to open. And the market literally opens the next candle. Now check this out. We do not need to do anything about the pre-market high, pre-market low. Why? Because it didn't move whatsoever. Do you understand? So we're good. This is pre-market low, this is pre-market high. Let's see. There's no gap whatsoever. That's good. All right. First 5-minute candle in. 10 minutes. 15 minutes in. Oh my goodness. Insane move happened already in the first 15 minutes. Big dump. Okay, what are we going to do here? Mark the pre-market low, mark the pre-market high. Let's do this. Looking good. ORB high, ORB low. We're good to go. What we need to do is let's just see some sort of a little pullback. No pullback yet. Nothing. Nothing. It went back and retested. A candle closed below ORB. Next candle went back, retested, made a huge push. Started bouncing off this critical zone. Exactly the same thing happening. Exactly the same thing happening from last 2 days. Bounces off this 400 moving average. Now we're gonna mark we don't need to mark this critical level. Why? Because we already have this critical level marked on our charts as of this stage. But what we can do is we can mark this as a critical zone. So we know, because this is where the 200 moving average was and the price is 400 moving average was and the price is bounced. Okay, let's see. Boom, this is a pullback. Now how do I know this is a pullback? Because of this wick and this wick at the top. If you go on a quick smaller time frame, you'll be able to see green candles. Boom, you see this? Does it look like a pullback? Over time now you're like, but it's not a different color candle. I understand. It's a little flag pattern forming. Flag pattern below the critical. Now think about it. The critical zone that we marked on our chart, because of 400 moving average, there's multiple reasons why this trade can work. Number one, it's below pre-market low. Right? Pre-market low is right here. It's below pre-market low. Number two, it's below ORB low. Number three, it's a flag. If this flag breaks, there's a reason, people who trade flag patterns are jumping in. Number four, 400 MA zone will be breaking right here. And number five, level flag strategy. A critical level is right here. A flag is forming on top of that critical level. You take this trade. Do you understand what I'm saying? There's 5 reasons why you can take this trade towards the downside. And those 5 reasons are looking absolutely beautiful. Let's see how it goes. Will we get paid? Oh my goodness, look at that. So fucking good. Anything else? Oh, holy moly. Oh my goodness. Oh no. Oh my god. Let me see if I caught this trade on that given day. Bro. I did. I made I made 12 grand on this given day. Check this out. So beautiful. Nice. Everything. Hey, what a trade. What an absolutely beautiful trade. Now, if you do not have any levels, what you can do is you can go on an hourly chart again and try to go back and try to see if there's any levels. For example, this would have been a level right here. Or this would have been a level right here. Or even this would have been a level right here. Do you understand? From this wicks. So if you go on a 5-minute chart now, all of a sudden you have levels ready to freaking go. And that's what I mean, right? We got the levels from the past, the levels which were there. And those levels, I'm telling you, those levels are accurate like hell, bro. Like, you'll be like so surprised. You understand what I'm saying? Like, check this. Oh my goodness. That's all I'm saying. All I'm saying is, we on repeat going on at this stage. I've like shown you 4 days in a row. Think about it. And it started bouncing. We'll probably get a little VWAP reject right there. Okay, a little VWAP rejection. Right there, white line rejection, VWAP, and critical level, and 221 EMA. And we saw a little rejection. The zone still exists. If the prices do get to that zone, we probably will get another rejection. Price is getting to the zone. Almost did, but it didn't touch the zone, and hence where we are. Over and over again, on repeat. How do you do that, Sumesh? Because I just follow my system. I do not chase. Because I do not blow my trading account on days like this, I'm able to catch big moves like on these days. That's how I do it. Let's go. Let's do one more time. Let's go on the hourly chart. Let's just go on repeat one more time. What do you reckon? Hey, this is fun, isn't it? This is fun. I'm telling you, this is absolute fun. You don't understand. We did that whole entire week. Think about it. Let's do one more day. This Friday. Let's go to 8 a.m. 8 a.m. This is 8 a.m. Okay. Let's mark your pre-market low. This is a pre-market low. This is a pre-market high. This is 200 moving average hourly. This is yesterday's low. And this is yesterday's high from so far. Okay, so this is pre-market low. The pre-market high. What we need here. This is pre-market high. This is pre-market low. This one is 200 hourly. Okay, so we need 3 levels for the upside above pre-market high. Okay, we got one here. I can't see anything properly. I'll go to the line chart really quick. Okay, now I see. Let's go on a candlestick again, adjust it. Okay, this one moved down a little bit, this one. Okay, so I got 3 levels upside. So simple. Now I need 3 levels for the downside. Boom. 1. Boom 2. Boom 3. Boom 4, just in case, because it's so much easier to draw level. All right, so we're good to go. Let's go on a 5-minute chart and see and sit back and wait for the market to open and see what happens. The market about to open. Boom. Market opened. 1, 2, 3 candles. Here we go. And that gives us our ORB high and ORB low. Let's go ahead and mark them. This is ORB low. This is ORB high. Let's go ahead and mark this. ORB high. Okay. ORB low. Okay. All right. Let's see. So far, there's nothing. There's no trend. Okay, up and down. It's like a seesaw. Nothing. It's in the middle of the range. I'm not trading this. I'm not trading this. Okay, prices clearly, so far, this is what the prices are doing. We are seeing a little bit of a rejection. There's no entry whatsoever so far. Okay, we start seeing a little rejection, but is this a trend? It doesn't look like a trend. It looks super choppy, but what we'll do is we'll mark this as a little area where the price is rejected. Intraday level. Okay, so what I'll do is I'll mark this as an intraday level. Why? Because it looks like prices are getting rejected here. Intraday level. Okay. Otherwise, it's not a solid trend. I'm not interested in this. Super tight range. I'm not interested. Up until if the candle breaks above this intraday level, and then you start seeing a little bit of a retest, probably. Otherwise, no. Okay, candle closed above. This is good. Okay, so the candle is able to close above this. Now, if you get a retest of this, that might be good. Do you understand? Because even in the early morning, ORB broke above retest. It didn't respect the ORB as much as well. Like, it was nothing. There was nothing going on. And maybe going to be nothing here as well. Because if something doesn't respect one level that day, it's going to be a bitch entire day. Like, check this out yesterday. What happened? It broke below ORB, went back, retested this ORB. And what happened? It respected levels like that pretty much entire day. Even the day before, it broke above this ORB right here, came back, retest, and then went ahead, then retest this entry thing again and made a move up. Even this entry thing again. Every single stock has a nature on the day. You understand? Every single stock has a nature on the day. It's a given nature of the stock market. Like if one, I might look stupid a minute later. But I'm just giving you what I know of the stock market. Every single stock has a nature on the day. That means some days it respects levels significantly. Some days it doesn't respect levels significantly. The days that it doesn't respect levels significantly, like in this case, ORB just breaks and whatever 3 or 4 times it didn't respect ORB whatsoever, ORB high. Those are the days, in my opinion, that you cannot rely on the levels as much. If it respects them, means there's market participation happening. That means other people are seeing what you are seeing. But if it doesn't respect them, means that other people are not able to see what you are seeing right now. Maybe you are saying it's an intraday level. Maybe they're not. Because they clearly didn't pay attention to the ORB level, which is maybe even more important level than intraday. You understand? And that's why I wouldn't probably not do the retest. Boom. Here you go. I rest my case. There you go. The prices stay choppy entire day. How many people here would have lost their trading account? Just say me. You would have lost your trading accounts while I haven't even taken a trade. Price is so choppy. Imagine this. After a day like this where you make a lot of freaking money, why the fuck would you even why would you even risk anything here? If I can risk heavy on these days, I don't need to risk anything on these days. I'm not liking anything. It's not respecting any level. It's not doing any of that thing. So I'm not interested. Maybe there are quick scalps at the open price a little bit later in the day. This is the open price, the first very print of the day. But so far, I don't like it. So what we're going to do is we're going to go on an hourly chart and see if maybe this day is just not worth it. Maybe the next day we might see something nice. You understand what I'm saying? So what we will do is we will go and remove all the drawings. We'll go ATM at 8 a.m. Oh, market gap down significantly. Look at this. 7 a.m. This is 8 a.m. All right. There's a huge gap down. In the huge gap down, what did I say? You're gonna be nice first 10-15 minutes after the ORB. It might give us nice trades. All right. Let's mark pre-market high, pre-market low. What next? Yesterday's low, yesterday high. What next? 200 moving average. What next? Above pre-market high, we need 3 levels. We got 1. Second is probably right here. Third one's probably this gap right here. Now I understand these are the levels as well, but they're very far away. This is good. 1, 2, 3. Pre-market high. Let's do pre-market low. 1 level right here. 1 level right there. All right, we need 3 levels. We got 3 levels for the upside below pre-mark. No, we got 2 levels below. Okay, let's do this one. Done. Let's mark everything that we have done. So this is 200 hourly. This is pre-market low. This is pre-market high. All right, we're good to go. Let's go on a 5-minute chart and wait patiently if we do find a sexy trade. You understand? All right, so far we're here. Let's see. Market about to open. Next candle, boom, broke above the pre-market high. Okay, we're waiting. Next. Okay, we're waiting. All right, first 15 minutes done. Let's mark the ORB. This is ORB high. This is ORB low. Let's do this. ORB low. And this one is ORB high. Okay, so we got the level sorted. This is done. All right, so now what we need to do is we need to see if the prices can break above ORBs or whatever. Okay, prices broke above. Okay, we need to draw Fibonacci. We need a little red candle or a little pullback. Okay, a little red candle right there. Touch ORB and looks bloody beautiful. Might give us an entry right here. Let's draw the Fibonacci from the lowest point to the highest point available, and it's bouncing off 0.236. And oh my goodness, this is so many things happening here. So what we're gonna do is we're gonna mark our. Let me go ahead and mark this little zone right here. Whoa, there's so many things happening. Check this out. What's happening in this zone? Let's write it down. Let's write it down really quick. 1, a break and a retest of 200 SMA on a 5-minute chart. Okay. What's the second thing happening? Bounce of 0.236 Fibonacci level. Okay. What's the third thing happening? Break and a retest of hourly level that we drew. Okay, what next? Break and a retest of ORB level. Okay, what next? That's so many things happening here. Right, there's already so many things. As soon as I see this, I'm jumping in the trade with the stop loss on the other side of the ORB right away. Literally on this, not the ORB, on the other side of the 0.236 or probably low of this candle, I'm jumping in the trade. Literally. Let's see what happens next. Oh, even better. It's making a level flag strategy, the strategy that I was talking about before. Another reason. Level flag strategy. It's making a flag on top of a level. So there's a flag. Another form of confirmation. There's 6 reasons for you and me to jump into this trade. 6 reasons for this trade to work. Guess what? we going heavy on this. If you went heavy on a day like yesterday where the prices were super choppy, you deserve to freaking go heavy on this as well. If you went light on that day, that means you know how to trade. But we already in the trade. I probably will add to the trade as soon as this flag breaks. Check this out. Oh my goodness. Oh my goodness. Oh my goodness. Look at that shit. I rest my case, man. I rest my case. Literally, I rest my case. This is the beauty of all this. Absolutely insane. Now, because remember what happened earlier in the day? Check this out, bro. I don't remember what I did on this given day. I'm just like showing you in the real time. Remember what happened in the previous days? Here the price is rejected so significant. You see this? And now what we can do is we can also draw Fibonacci as well. By the way, at the top, the point where the trend started. Let me just adjust this Fibonacci. Okay, right there. Boom. Remember earlier in the day the price is rejected around this area? And I've seen this happen too many times where 200 simple moving average on a smaller time frame will break and then it goes back and retest and it forms a absolutely fantastic fucking trade again. One more setup, my setup at the ORB high, break and retest. There's so many things. If it comes down to that point, there's a Fibonacci area. If it might bounce off this area, but if it does, it'll be beautiful. Oh my goodness, fuck. There's a VWAP, there's 21 EMA, there's ORB high, there's so many things happening. Okay, this is a beautiful flag happening at the top right now. Okay. There's like it's getting tighter and tighter into this little pendant. All right. Oh my goodness. Bro, I rest my case. Check this out. I rest my case. All you need to do is, now I went ahead and showed you like what, a full 1 week, maybe even 6 days of backtesting. You saw the beauty of this. How many stop losses of mine got triggered? Probably one here, a few, maybe two. How many trades, entries, exits that came along? So many. All I did was waited patiently for my best possible setups, and that's it. And as soon as I made money, I'm like done. I'm calling it a day. That's it. You do not have to overcomplicate this. You do not need to overcomplicate it. Trading is meant to be simple. And you know what happens when you keep it simple? The thing that changes in your trading is not just your trading, but also your life. I mean, hang on, let me show you my trade seller. This is what changes. I have a 75% win rate. I win about 78% of the days. 75% win rate is massive. That means 731 trades I won, 243 I lost. That is huge. If anybody been trading for a while, you know that. You understand what I'm saying? And maybe let's say earlier this year, like we were doing, let's do earlier this year from 1st of Jan to just day of me recording this. This is what changes in your trading. Everything. Look at my month. Right here. Bro, insane. I need to hang on, let me make this a little bit smaller. Check this out. Every single month, 250, 230, 465, 550, 342, 465. And so far for July, I believe I've only taken there's only 2 days that have gone by July. This is June. This was so insane, man. This last month was so insane. Literally had 2 losing days. Your winners get bigger and bigger. Your losers get smaller and smaller. Check this out. Do you see this? My winners get bigger and bigger. My losses get smaller and smaller. That's what I'm trying to say. Check this out. In month of May, I made 342,000, and these are my results. Now I understand Wednesday and Thursday twice, but check my amount of losses. How much I'm losing when I'm losing, and how much I'm making when I'm making, because I got my risk management on point. Check this out. This probably was the biggest loss that I've taken in a long, long time. Probably this whole year, 25 point. Yeah, I think so. I believe so. No, 22. Yeah, probably. Probably was. I think last year was the biggest one, 40 something thousand in a day. But you understand my point. Here we are. No, that was earlier this year, Jan. That's 41K that day. Yeah. Um, that was lost because of I was trading Fibonacci. I was trading FOMC. FOMC is when the Feds are coming out doing. It was literally a gamble of a trade that I was taking. If it would have worked, it would have made me like $300,000 or something. So it was worth it. But you understand my point. Look at this. There's so many days when I didn't even take a trade. You don't have to trade every single day. Keep your trading simple. That's the only way to grow. Think about this. The only reason why I'm showing you all of this is go back test this stuff even further. You know what you're looking for. Literally, you now have the complete system. You know the basics. You know how to draw levels. You know how to spot the trend. You know exactly where to enter, exactly how to manage your risk, exactly where to take profits. This is a system that changed my life. But remember, building the discipline to follow this every single day, it's gonna take time and it's not gonna come early. But if you want to shortcut that learning curve, it might take you otherwise 3 years to get that exactly right. But if you want to shortcut that learning curve, if you want direct mentorship, so I can watch over your shoulder, guide you in the real time, and show you in the real time what's happening, and you have me by your side, you have my seven-figure people who are making money by your side, you have so many other people who are so far ahead of your journey by your side. And if you want to trade live with me by watching my screens in the real time with me and my students every single day, click the first link in the description down below. Literally, right now. Click the link in the description down below to join the inner circle. We share live trading link every single day. We mark the levels together, we execute the plan, and I'll see you there. Every single Sunday we jump on a call to continue talking more about your psychology, what's happening, where you going wrong and everything, so we can continue making your learning curve shorter and shorter. You understand what I'm saying? I hope you enjoyed this video, and if you haven't yet, subscribe to the channel. I'll catch you in the next one. Peace.